right? You guys can find us under 101 Trading. So in the Discord, I do suggest you guys go through the PowerPoint. Really, attend this class if it's the monthly one. Attend the class, understand the PowerPoint. You're not going to understand it all. Just like if you get a new job, somebody hands you a PowerPoint, everything you're going to do, you're not going to pick up all of it immediately, right? So the goal for you guys is that, you come back month over month or a week over week, depends how fast you progress, and that you're actually applying what you're learning and seeing it, right? And it should be applicable on smaller accounts, smaller money impacts, smaller capital impacts, instead of going 10 packs and losing all the money at once, right? From mental side, if you haven't read Trading in the Zone or any Mark Douglas books, I suggest you guys read that. Trading is a game of mental capacity. It's technical is important, right? But being patient, not itching for trades or not taking trades that don't have high probabilities will eventually catch up with you, especially if you're trading with something like 1-1 risk to reward. You're not going to last long, right? So in terms of this Discord, I would say 99% of us use volume profile, TPOs, or footprints to trade. Nothing wrong with trading, adding confluence items. I'm not big of lagging indicators such as RSI, MACDs, and whatnot. But if you found a combo that works with volume profile and identifying these things, that's great. Use it, right? I would always tell you the market auction generates enough information for you to know way before a lagging indicator comes in and gives you that, a divergence or whatnot you're looking for. So it really is a picking up of a new job, a highly paid job. So don't expect returns on your investment of time to be there really quick. The payback period is there, but you have to grind every day. You have to learn every day, and you have to enjoy life. If you're constantly looking at charts Monday through Sunday and you're not giving yourself opportunity to do something else, then you're overdoing it. You're overstimulating and you're going to get paralysis from analysis. And that's not good in trading either, because then you won't be able to pull a trigger because this line said this trend line said that, this fib is not there. And you're just going to end up watching a lot of trades as they, fly away. And lastly, I don't think there's a better trading class, not particularly ours, but when you're watching people trade live, and people give you the commentary, right? Drew does it, I do it. I'm telling you, like yesterday we were watching 43 on NQ. I said, hey, I think somebody mentioned I'm gonna go long like 55. I just said I'm gonna wait for 43, 44 area and see how they do. And I don't know if you guys looked at the chart, but from 43, 44, that was the trampoline. That was the level where we basically ran another 100 and something points from NQ. And if you set back, if you want to learn, the question is, why did it do that? How was I able to diagnose that that's potentially going to happen? Why did it happen? And you go back to a chart and you look at volume profile, deltas, and see what makes sense. And then things will click. And the more you document what clicks, the more you repeat the same setup, the higher chances are you're going to be profitable, right? If you're looking for 30 different setups every day, different tickers, right? You're going to have a hard time keeping up with levels. You should know most of your levels that you're trading, whatever that is, SPY, Qs, ES, NQ. We trade options as well, but there's a significant change in options lately with the 0 DTE that causes a lot of volatility and the pricing of them. So it's the model that's set up basically for dealers to make more money, right? And I have been trading SPX as well, but more so on futures, just because it's much easier to predict or react to a direction than it is to react to a direction plus theta. So that's where we are. Okay. Let me skip through this. We'll go on the auction process. So we strongly believe understanding market auction theory is very, very important. Market goes from period of balance to imbalance. When we mention balance in terms of volume profile, we're talking about the value areas, right? Value area is just basically 68% of the volume or 70% as a standard, where a lot of volume is traded. If 68% of the volume is traded at between two levels, you're interested to know once you break these levels, and that could lead to an imbalance, and then you're going to be looking for an acceptance of that area, and acceptance usually comes back when you come to the top of that. Let's say you broke up like we did Friday, you're looking for a retest of value area highs or the range tops, right? If you had 3-day balance, you're finding that value area high on the 3 days, and you're going to be looking for the retest, right? And then for the rejection, it's the same thing. Let's say we lose that on Monday or Tuesday, whenever we open futures for with serious volume. If we fail below and you're rejecting the top, meaning there was an excess supply, buyers did not find much value above this, then you're going to be looking for a rejection. And that would look like something like this. You go below the value area high or the range top, whatever you're using, and it's coming in and it's rejecting that. And it's telling you most of the time it's going to reach for the opposite side value area low. When you think about market auction, this is basically what happens, a lot. If you're a buyer, right, you're going to have, and just not yourself, me, others, everyone has multiple bids, right, at different prices. And sellers are going to have offers, right? And if those things are not matching, meaning if I'm asking for 10 and this guy's offering the highest bid at 8, there won't be any transactions made, right? But if this guy drops it, right, to 8 and this guy has a bid for 8, then it's going to be matched and the trade's executed. Everything in between is spread, right? And then it depends who's more aggressive. If this guy's asking for 10, but this guy's offering 9, well, if this guy makes a move and offers 10, what does it make this guy? Aggressive or passive? This guy,
Passive.
meaning it would be an aggressive buyer.
Oh, I'm
If
sorry.
if I'm a buyer and I'm just think about it. You're selling shoes. You want $10 for shoes, right? And I'm a buyer and I offer you 8, and you're like, no. I offer you 9 and you say no. I offer you 9.5 and you say no. Then I offer you 10. What does that make me?
Passive.
Okay, I see. I see.
I'm not bidding below. I'm asking at the ask. I'm buying at the ask. That makes me aggressive, right? Because you're selling shoes at 10 and you're not changing your sell price. That makes you what? On the sell side, what are you? Are a passive or aggressive seller?
So
Passive.
those are limit orders?
I'm giving you a scenario of market auction. You would be a passive seller because your price was $10 of shoes and you did not change the price till it got sold. That would make you a passive seller because you're not lowering your price. I'll give you a scenario now. You're selling shoes at $10 and you had them in the market for, let's say, 10 days, right? And you didn't get any traction on them. No bids close to it. Well, let's say you drop it to 8 and, somebody comes and like, hey, I'll give you 7. And you accept that. What does that make you?
Aggressive.
Aggressive.
You're an aggressive seller because you're looking to get rid of your inventory. You're trying to get rid of the shoes. Inventory in this case is your shoes. And same thing happens in the stock market. Somebody wants, let's say 15.1 on NQ and they have offers at 15.1. Well, they're like, hey, we have this many lots. We have 1,000 lots at 15.1. And these people are like, well, we're willing to buy it at 15, let's say 0.50. Well, that's a 50-point spread, right? Rarely happens in NQ, but there's a discrepancy. We can't agree. There won't be any orders. So basically, it depends who makes a move on the market. If this guy's offering 15.1 and somebody buys it and then it goes 15.101 and people keep buying it as the ask is increasing, those are usually most of the time short-term traders coming in and they're driving the price up. Okay. Big boys, they usually don't execute mid-market orders, right? Because that would spook the market. They usually try to hide their intentions. And a passive seller would be sitting on the ask, right? A passive buyer would be sitting on the bid side. Does that make sense?
Yes,
anyone-
sir.
Is anyone confused so far? We haven't covered much. Okay. It's important that you guys understand basically this picture, right? And understand when does one become aggressive, when is one passive. If I'm selling something at 10 and I lower my acceptance price for an item I'm selling, that makes me an aggressive seller. If I really want this product that was 10 and I see people buying it, well, what if I offer 10 and a half? Maybe she'll accept the offer, right? And think about what happened in the housing market, maybe 2020, 21. If you're a real estate agent, you did well, right? Any house that went on the market, what happened to the asking price? Let's say it was $500,000. Well, when me and my wife were looking for a house, I mean, you couldn't even, I mean, people were putting asking price was, let's say, $1 million, and they would come in like, hey, we'll do 1.1. And it's like, hold on, you just went 10% above asking. And they're like, yeah, we want that house. So somebody found value at that house that they were willing to offer more, and they became an aggressive buyer. If somebody's a passive buyer, are they in the market to buy a house right now?
No.
No, most likely they're going to wait and see how it plays out, right? You know, affordability index for housing is almost the same as 2008, a little worse than 2008. The next step is like 1955s. Average monthly payment is 3,000. So in this case, you're not going to have as many aggressive buyers on the housing inventory. First, you got to pick up an interest rate that's fairly high, right? Unless you're paying cash. And then you have, right, the asset inflation, right? They're still fairly high prices, right? You look up some houses and you're like, man, it's like a shed. I'm not paying $500,000 for that. So now, you know, if the auction is slowing down on housing, then there's going to be a pullback, right? And if you go back and look at the affordability index, it's gonna pull back to a price where values seemed fair or unfair low, and buyers would come in and they would have bids. So think about a house that you're looking at. If anyone looked at a house, let's say it's 500K and the price drops to 270, I think you might be in the market to buy it, even with the 8%, right? Because now your offset of interest is caused by the price drop of an asset, and therefore you're becoming interested. And it's the same exact thing that happens in the stock market, just that it happens brutally fast. Like, I mean, some fast. Okay. Just to understand, you know, you have short day time frame traders. They're looking in, you know, just day to day, and then you have long-term traders, right? Usually long-term buyers and long-term sellers, they don't cross paths, and you know, it's rare that they do, but if they do, the level is going to be heavily, you know, volume and time spent at that level is going to be large, just because they can't trade a couple of million shares quickly, right? They are traded in chunks like iceberg orders, or and it takes time to execute that, right? So the dealers have to be prepared for it, and both sides are, you know, have to have a buyer for every sell, and for every sell you have to have a buyer, for every buy you have to have a sell. So it has to really coordinate that large auction that happens, right? So I'll skip over this. The three components are fairly, you know, I hope that most of you understand this by now. You have the time, price, and volume. A lot of people that, like I mentioned, use lagging indicators. If you take any of these components out, there's no market. It doesn't matter which component you take out, there's no market. If you take out RSI or any of the other crap, guess what? The market still goes on, right? It's not gonna influence the market. You need participation, you need volume, you need the time, right? And not only regulates the open and close of the market, but it also regulates the opportunity. And then you need price, right? Which is, you know, I consider truly as a discovery tool, right? If you go to a level and you're not able to be accepted and you see a quick rejection, well, most likely you're not going to accept it. So in the case of the, you know, what we talked about here, let's say you like Converse shoes, right? And I'm asking $1,000 for just a pair of black Converse shoes. Who'd be interested in buying it? Nobody?
I need to know the price.
No one's gonna buy it.
Nobody's gonna buy it, guys. $1,000 for fucking Converse shoes. Nobody's gonna buy it. You don't have to think about it. In your brain, you have a value, and your value is probably gonna be between $30 and $40, right? And if you're really, aware buyer, responsible buyer, you're gonna look for a sale off that $40 to get it for 30 or 20, right? And the same exact occurs in here, right? The price, if the price reaches a level and you see a stalling market auction, right? Yeah, well, yesterday we saw 2 completed auctions right in the beginning. It was like 9:30 and 10 on 30 minutes and 15 minutes. We saw that they were not really selling at the bottom. They completed the auction, right? And if you complete the auction at the bottom, the price naturally has to do what? You're gonna have to increase the price because now you're getting buyers involved. If you've ever been to a market auction, Thierry, you just go to one, experience something, right? Go look at car auction, right? It starts if it's a good looking car, and it's in demand. See how quickly those bids come in. And at one point, the auction, not many hands are gonna go up as the price goes higher. And that's normal, right? Because you're just, in humans, right? There's people that have more money, there's people that have less money. So, and I would say there's a lot more people that don't have money than people that have money, because a lot of wealth is concentrated in that 1-2%. And if you're on, if you're an expensive market auction, you might have the rich people sitting, but their value perception is different. So if you see the auction slowing down as the price is going up, that really tells you, if you have interest at that level. And if there's no interest at that level, most likely happens what? Somebody's going to buy it. If it's a proper market auction close and you finish the auction, right? You're going to have a winner, right? Somebody's going to win that item. But then what happens? If we stalled already and let's say we sold your, Converse shoes at 55, if I want to sell next pair of, shoes, do I start at 55? Do I start at 60? Would it make sense if I start, we completed auction on Converse shoes at 55. Would it make sense that I start the next auction for the same shoes at 60?
I don't know, maybe 56?
But it completed at 55.
You go down to 54.
I have to go to 54, guys. If somebody wanted to buy a 55, don't you think they would have offered 55 and a half?
I
Right?
see, yes.
Yeah.
Hopefully that makes sense. And when I talk, when I learn, I try to visualize things. Like when I read a book, I don't know if you guys do, but I literally try to picture what I'm reading. And I try to put it in kind of weird, I try to visualize what is the book doing. And when I learn stuff like now, I can, visualize somebody, hey, Converse shoes 55, and they say sold. And then they're like, hey, here's a new pair of shoes starting at 55 and a half. Who's stupid? You just sold shoes for 55, but you're going to start a new auction on the same shoes 50 cents higher. How do you think that would look like on a live auction?
Well, I thought that if there were buyers, they'd keep buying and buy it up. But
Well,
I guess
we
not.
just finished one. Well, think about it, Free. We just finished an auction. I'll give you guys an auction. I'll give you a real auction. $100 auction from me right now. Whoever wins, I'll give it to you for the price that you offer. Who wants to start?
90.
97.
99.
99.75.
99.99. Right?
Shorty, you're gonna wait until they, until they
Do
bring
you have
the
an
price
offer, or
higher
you're
and
gonna
higher
ask
and
questions?
higher.
Do you have an offer? 99.99 is the last one.
100.
105 is to blow up everybody because of one it is.
Well, now think
Because
about it.
right now,
Let's stop. Let's assume the guy 99.99 won. Okay, I'll give you your penny. I'll Venmo you a penny. Okay. So now think about this. I'm starting a new auction. I'm selling $100 and 110.
Yeah, nobody's gonna want it.
Nobody's
I
gonna
get
buy.
it.
There's no. Yeah, you won't get any offers.
You won't get any offers, guys. The way market behaves is once the auction is complete, and that's why I don't use, completed auctions or unfinished as a strategy for me, but it tells me a lot. If you're, obviously we haven't been able to break the lows, and I'll show you guys later when we go into the charts. We had a lot of selling, but the low was not taken out. And anytime we dipped below a certain level, the volume was away. Well, that tells me nobody was really interested in selling there because the price was too cheap. So, of course, yesterday the hedges, it seems like some options were removed. And then what do you see with the price? I mean, you go 300 points on NQ. And they were really not giving on pullbacks. And a lot of people, the natural emotion step in is like, man, am I chasing if I get in here, right? And you feel like you left out the trade, and that's okay to be left out. Maybe, you missed a trend day, and that's okay. Then you have to diagnose, hey, what's a good level for re-entry the next day? You don't have to trade that day. You'll have opportunities, right? And the only way you get opportunity is the time, right? Maybe tomorrow or the day after you get it. That's the time. It regulates the opportunity. If Monday it comes to, let's say, 15.1, that's a pretty good price action, because if you go, once you look at the charts, you'll see that there's a decent volume node there. But now you're coming back for a retest, you went higher. Well, let's see what we do. If you lose that, let's say we give it 7-8 points risk, so 92, high chances you're going to revisit 1550 on NQ. Because 1550 was the balance top. Now you're coming to retest. If you fail, that's telling me there was no value above. You're going to go to the bottom of the range value. So like 14.8. So now we just covered, the value, the acceptance, price, time, and volume. Yankee, any questions? I'm sorry, I didn't mean to cut you off. I just wanted to make sure everybody got the point.
no, I got it.
Okay. Like I said, time is very important. If time and volume are correlated, it's a really, really important aspect in trading, right? Sometimes, you guys experience this, everybody. I experience it daily. Me and Dumpster were waiting the other day. I think it was Thursday or Wednesday. I don't know what day. He got filled. I did not. I was off first on the level by a quarter or 50, 0.5, 1/2 of a point. I was off, but he was there. The price was good for him, and the timing of his entry was really good, and he was able to capture a really good reward, right? It's almost like, I was talking to my wife. We were actually decorating the house for Halloween for the kids the past 2-3 days. And she's like, man, everything seems like so expensive. You go to, Home Depot and Lowe's, and like a little inflated thing's like $200. And I told her, well, she told me, she was like, well, it wouldn't be a bad idea once this season quickly goes away, because on like November 4th, what happens to those items?
They go on sale.
So why does it go on sale?
Nobody wants it now.
Are you sure nobody wants it?
The demand is
Well,
lower.
because they can get it cheaper.
The demand is low.
They need to get rid of the inventory.
They need to get rid of the inventory. But why? What? I mean, they get rid of the inventory, and then what? What does the store do?
Put up Thanksgiving
needs to-
decorations.
They have new inventory to offer.
Yeah.
I can't offer the same stuff on top of the same stuff. So what they do on, especially on items like this, is they mark them up so much that they make up for the inventory that they're going to sell at clearance. Right? But if you're a responsible buyer and you work with time, do you think the blow up thing is going to change from 1 year to another? Is it going to look better? Yeah, maybe they're going to change
No.
the color. It's going to be the same shit. My son says spooky. It's going to be the same spooky shit. It's just how you want to see it. Is it going to light up with orange or purple lights? But the idea is once the inventory and demand is low at these prices and time, right? Time is important, especially in retailers and when they have these seasonal items that come in, and it's the same thing in the stock market. We have seasonalities in markets, right? I mean, did anyone buy any bonds lately? I mean, you're getting 5% risk free. Not a bad time, right? I mean, if you buy a bond, you get 5% risk free. Can you call your bank and ask them to see what they give you on a CD? They're going to give you 5. Good luck. Called greed, right? It's called banker's greed, right? They're not going to give you 5%, even though the bonds are giving you 5%. They're going to give you 2.5% because they want to keep 2.5% for themselves. Okay. So does everybody understand the 3 components? Any questions on this? And then the volume is the one that confirms it, that hopefully that understands it. As we got to the top of the $100 auction, how many people bid? We got less and less, right? Just because a $100 bill has a $100 value, right? If I was to put a Cartier ring here, it might be, dependent on who finds value of that ring and who wants it. It might drive different price jumps. And if you look at, market is forward looking, so maybe the market discounted the NFP numbers. I mean, they came in pretty hot, but it doesn't really say how many people have 4 jobs to pay, monthly rent now. Because everything's inflated, right? So I mean, maybe people are getting more and more jobs just to cover. I know people that have 2 jobs. The market right now, I'm talking about macro, is really different than it was. Drastically, it's different now than it was, let's say, 5 years ago. And if I was going to say something about the macro, the timing of it, we haven't even started the recession yet. We haven't seen, I would say we started maybe 10%. Not even, I would say probably less. What can happen is we've only seen about 5 to 10% of it, honestly. Okay. I'll skip through this, right? This is important for you guys to know, especially on the footprint charts. Because footprint charts that I use and order flow is really about understanding the aggressive and passive sides, just like I explained on that slide with the buyer, dealer, and the seller. It's important to know where they show up. Footprints are not, the holy grail of trading, but if you understand certain major levels like support and resistance, and you see certain sides inflated, it can give you you can get a little bit of picture of what's going on. So aggressive buyers, right? They take the liquidity takers through the use of market orders, right? So if you want to get in to buy a share of something right now, how do you do it? You have to click market and you're going to get the best fill available. But if you have I have some passive buys on, let's say, AMD, I have some passive buys on certain levels, right, on different stocks. I'm a passive buyer. I'm showing up on a bid. So if you're to turn on like level 3 tape, some of the orders at that level might be mine. And if there's a lot of orders sitting at that price level, what do you think the price is gonna do? If the price is 30 points away, let's say AMD is 100, I have some at 75, and there's a bunch of people sitting at 75, what do you think the price eventually does?
It goes up.
It's eventually gonna come to that level. The liquidity at that level itself, the market is just a mechanism of matching orders, and eventually it's gonna match and come to that level where there's a lot of liquidity, right? So those will be passive buyers sitting and buying. If I bought AMD, let's say when I bought it at 50 something, and I was looking to sell at 88, 90, I had orders sitting there. And as the price went to that level, it just executed. Okay. So I was a passive buyer at one point, and then I was a passive seller at one point. I didn't go day to day and just buy one market share of AMD. Okay. If I wanted, like yesterday, I bought some shares of Tyson Foods, I bought some Verizon, and there's a Real TO, the ticker is just O. I bought some of those. Did I go limit or buy? What do you guys think?
Limit.
Yesterday I didn't. I went with the market because it was in the range that I was looking to buy it. So I might show up as an aggressive buyer yesterday, right? But that's for me, it's going to be a long-term hold. So sometimes smaller players like me and you and everyone probably in this room is considered a smaller player in the market. When you buy 500 shares of something, right? You're not really moving the needle in terms of number of outstanding shares for that instrument. If I'm buying market, I'm not gonna buy market. I don't buy market at if you're at the top, like I didn't buy market Apple at 180, 190. I personally would never do that. I look at the volume profile, I look at different analysis we do, and I'll be like, okay, well, when it comes to this level, because when you put limit orders, right, on something, depending on who's your broker, they can take your capital, right, and don't count it as available because you have it committed to that order, right? So depends what instrument is and how bad you want it. You can place some limit orders, right? But if I see it coming to a level, right, I'll buy it. Like Clorox, Clorox is at a really decent level here. I did not get any yet, but I plan on looking at it this weekend, see if I can catch some Monday. Also Delta, if you guys look at Delta Airlines, I'm watching Delta, and we'll take a look at some tickers. It's at a level where I don't mind buying some. It has about $15 upside from here, so I don't mind buying it here. I don't foresee right now. I know economy is going to slow down. Traveling might slow down, so I'm not going, all hands in, all in on it. No, I'm just buying small. They have decent dividends, right? So I buy them and I hold for long term. It's not, hold for 3 days and get out. Okay. So I'm a passive buyer there, and then I'm a long-term buyer. Okay. Well, we're starting off with footprints charts because it's probably the easiest to understand without confusing you with volume profile first. Okay. Is there anyone here on this call that hasn't used footprint charts? Just say I haven't.
I haven't, but I've seen yours.
Well, yeah, you've seen it. Is there anyone that hasn't seen footprint charts?
I haven't.
Okay. All right, good. So only one person. So everybody else, I can ask you guys questions randomly, and you guys should be in to answer it. Is that correct?
Yes, sir.
Let's see who we got.
Miso the trader.
Say it again.
Miso the trader.
Oh, I know who you are. I recognize your voice now. Let's see. I'm just looking here. Texas Raj, you've used it before?
I've seen it. I've heard about it, but it's got volume on the bid and ask on the same candle, and I've seen it go up and down, but I don't know the details behind it, especially at the top or the bottom when one side is a zero.
Okay, good.
Yeah.
All right. Well, let's ask at the end of this what you know. All right. So in terms of footprints, it's basically when you look at the candles, it's identical as a candle, and I'll show you guys. I'm gonna flip between my charts and this so you guys can kind of understand it, right? If you look at a regular candle bar, right, the Japanese candles, it just looks like it has 4 components: open, high, low, and close. Footprint charts have the same thing, but they also have a lot more inside of it. They have the volume distribution of that candle. And then footprint chart will be even more details. It'll tell you at what level was there passive buyers, at what level was there aggressive buyers or sellers, right? So it carries more details. Instead of only 4 components, it gives you a lot more: open, high, low, close. It gives you where the POC of that candle is, where's the value area of that candle, and then it gives you if there's any stacked imbalances, meaning passive, or I'm sorry, aggressive buying or aggressive selling. You'll be able to see it on that candle, whether you're using daily 30 or, like Dumpsty 1-minute charts. It depends who you are. What's your personality? I personally don't trade anything, below 5 on footprints. I look for stacked imbalances on 30. So that's up to you. But this footprint chart just gives you the breakdown, just like we just did a market auction earlier, right? On a $100 bill. So the ask was, let's say I was asking, $100. I only got an offer close to that at 99.9, right? If we discount the one the Yankees sent for 105. At 99.9, that order probably would have matched, right? And it would be noted if I was asking for 100, but I accepted less. In this case, it would be me as an aggressive seller at the bid. But if I accepted the 105 offer, right, what would that be? That would mean we would have an aggressive buyer, right? It would be +1 delta. Okay. So when you look at footprint charts, we'll cover the models here of absorption, divergence, delta flip, stacked, high volume node or cluster volume, whatever you want to call it, and then approaching support, resistance, and candle POCs. So let me skip and go to this. If you're looking at the ask, right, and you're seeing you're at resistance, right, meaning you're somewhere at the top and you're seeing the ask number inflated, right, that's most likely passive sellers having their orders executed. If the price is not making above that level and you see, large quantities, that's passive sellers. This would be the holy grail if we didn't have 4 options. If we only had 2 options, it would be really, really easy to trade. But here you have aggressive sellers, right? Aggressive sellers show up on a bid and passive buyers show up on a bid. And that's what makes it tricky. You don't know, who is it? Is it an aggressive seller or a passive buyer? Does it help having the details? Of course, because I'm able to see who's stepping in and how's the price moving. Is the price discovery, lower after this, imbalance lower, meaning the aggressive seller steps in, or did it go higher, right? So those things you can help distinguish, and especially the context when you look at a footprint chart, it really helps. On the ask side, you have passive sellers and aggressive buyers. So you have 2, right? That kind of makes it difficult. If it was only one of them, it'd be easy. But here you have to add the context to figure out who it might be. Okay. Does this make sense? And you always look at it diagonally. You're not looking, unless you're looking at the bid ask, but this is an imbalance setup. If I'm looking at a lot of you guys use NinjaTrader and he does bid ask, right? Volume. So when Drew mentions and, hey, he uses absorption differently than I do, does anyone have an answer for that now that I thought about it last night? Does anyone have an answer? Why is it seen as different? I don't know if you guys heard that conversation me and Drew had. So Trader Dale, right? A good trader. He uses bid ask, so he shows total volume. When I trade on Quantower, what do I show?
Bid ask.
I show imbalance, right? I'm looking at the imbalance between the charts, right? I'm not necessarily looking at the bid ask on the same level. I'm looking at the diagonal level. So an absorption for me is slightly different, and it's identical, but it's the 2 different aspects of it, right? I'm looking to see where is the net result of how aggressive you were or aggressive buying you were. He looks at it in terms of total volume at that level, bid ask. If you're seeing a highly inflated bid ask, let's say at the bottom after a sell off, and you're seeing bid is coming in aggressive, also the ask is becoming aggressive, I mean inflated, then you'll be like, okay, that looks like an absorption. And that's why Drew says, yeah, I understand it differently. And that's nothing wrong with it, right? It's just the way you're set up and how you're trading. Okay. Does this make sense? So ask is the offer, right? What you're asking for, what you're offering to sell. And the bid is like, hey, what are you trying to pay? Unless the seller becomes aggressive and sells that bid. Does everybody understand that? That's my, it's important that you guys do understand this chart.
Yeah.
Hey, Shorty,
Mhm.
when the term absorption, what specifically does that mean? Does that mean that the contract's traded at that price, or what exactly is going on when you guys say absorption?
We'll get there. It's 2 slides down.
Oh, okay.
We'll cover it. Yep. It's important to understand this, and then absorption becomes easy, right? And this slide is very important, right? So if you think about this box here alone, aggressive seller takes liquidity from the bid. Does anyone want to try to explain why is that?
He'll take any price he can.
Yeah,
Right.
he's trying to get rid of his inventory, so he'll try to sell it at the closest one there below the current market price. If the current market price is 100 and he's not getting enough demand, well, he can say, man, I just want to get out of this. I want to sell these shoes as much as I can right here. So he's going to be like, okay, 99 is good. And it just depends, right? So my father-in-law, he's like an engineer, retired guy. He just enjoys fixing stuff. And, you know, when you enter 70s, that's what you do, I guess. So we were talking the other night. He's, you know, I don't know if you guys have elderly close to you, but he gets excited when he finds a lawnmower for $20. And I'm like, okay, and it's a really fun conversation for me. And I'm like, okay, tell me more. And I'm like, okay, so what are you gonna do? He's like, I cleaned it up, I put all the nuts and bolts together, and I'm like, so why are you like not selling it right now? He's like, well, I'm waiting for Friday. And I'm just like, okay, what's Friday? Well, what do you think an older person memory is of a Friday?
Payday.
Yeah.
Payday. And I'm just like, okay, I'm not laughing. I'm just absorbing and diagnosing. Where's he going with this? He's like, yeah, I'm gonna put it for Friday. I'm first gonna put it at $200. And I'm like, wow, that's an increase. He's like, I know it's a lot, but he's like, if I see, I'll max drop it to 175. And I'm just like, okay, this guy's, you know, he knows what he's doing. And then I'm like, are you selling anything else? He's like, I have a really good blower, but he's like, it's not up for sale yet. And I'm like, okay, why not? I know why not. I just want him to feel good and tell me his story. He's like, I haven't seen many leaves fall yet. What is he demonstrating by telling me that? He's demonstrating the price, the time, right? And then indirectly volume. I don't know how's the market for blowers right now, used blowers, but he's covering the two pieces. He's looking at trees and he's like, man, people are not ready to blow yet, so they're not going to be in demand. And he's waiting for Friday for a lawnmower so people get payday so they can come to him like he's a big market and they're going to come to him and he's going to sell it. Right? And same thing in here, right? If he was selling it for 175, let's say this section here is 175 and somebody came to him 150, well, if he accepts it, then he's taking the liquidity from the bid, right? Because he'll be accepting a lower price. Well, if somebody really wanted his lawnmower and he's like, hey, I'll buy it at 200, we would consider that guy is not okay. We would ask him, are you sure? We're asking 175. And if he says, sure, I'll give you 200 for it. Well, sure, you can have it, right? So that guy would be an aggressive buyer taking the liquidity from where? From the ask side, right? If he's offering, let's say, in this case, just 100, and this guy's like, I will take it for 102. Well, he's going to be taking liquidity from the ask side, right? At this level, there's that much liquidity, and he's going to be taking it out from there. Okay. And for price to move down and up, you have to take out all the availability quantity that's available at that level to move it up or down. Do you guys know how the orders were tested before electronics in those little bucket shops? Does anyone have an idea how that worked? I don't know if Burnside's on. He used to probably do it. Does anyone have an idea? Just think, we don't have electronics. You don't have market in place. You don't have dealers that have all the liquidity. How do you think somebody would test to see if something's in demand way before electronic trading came in?
They
Put
would have
yourself
an
back.
auction.
But how would you test if there's a high demand for it?
Put a bid out
You
there.
will,
Try
you
to
will
sell
start
them.
going, you will start making like a on your $100 bill, you will say like who's gonna offer 95 or 96. You will be taking the price.
That's good. Yeah. Put yourself back then and see how would I know? Let's say Apple, you know, I don't even know when they went public, but let's say Apple 1970s. You wanted to buy some shares, but you didn't know, besides open, high, low, and close and volume for that day, you didn't have more data than that. So the way people did test is that he'd be like, okay, I'm going to buy 500 shares in a bucket shop. The bucket shop was not interrelated. It wasn't connected to all the other shops where, you know, they might have had some shares. So if you go there and you're like, hey, 500 shares, and they're like, okay, and it takes 30 minutes to get the slip that you got filled, what does that tell you? Well,
Not enough
normally,
supply.
not enough supply, and you know, it might be fighting for demand there. If you put in an order for 500 and they're like, yeah, here you go. Oh, like you didn't have to, you know, find the share somewhere. You just have it like that. And then you put another order and it's like, oh, and the way people, you know, Peter and them, and how they used to figure out when to short, they would go long like that. And if it was so quick and available, then they would close it and they would become short. Because if the availability of supply was readily there, what does that tell you? Well, if you want to buy shares of Apple at that price, and there's, I'm just keep telling you, yep, I got it, I got it, I got it. Well, are you selling to offload or what's going on? How much do you have? It would take a lot more buying to lift the price up. Therefore, they would be like, okay, man, this is heavy supply. Let's go short, right? And of course, they use macro fundamental stuff to figure it out, but that's how you test it, right? To see how's the liquidity above. Does that make sense to everybody?
Yep.
Okay.
Yep.
So same two charts, right? This is regular candles, and then this is the footprint charts. It just looks like a low line with a bunch of bid ask, right? We do get the highest volume, and where's the concentration? Where's the buyers and sellers interested and not interested, right? If you see, you know, sometimes on my charts, and you'll see it on the next, you'll see like a little dotted lines on the candle. That tells me where 68% of the volume was traded on that candle, right? Then you have the concept of, you know, the statistics on the bottom that show us the delta, right? I personally use delta, max, min, and volume, right? I add cumulative sometimes, but I've never made a trade of cumulative. It was more of, you know, I don't want to fight the trend. If you're super green and I don't see any absorption, which we'll cover here shortly, I don't want to go against it, right? I want to make sure I'm going with the strength of the market, right? So if you see a bullish footprint, meaning bullish candle with negative delta, price is going up, but sellers are taking their short positions, what should you do? Should you go long?
No.
You want to be careful. That's a really like, hey, lights on sign. And if you read Anna Cooling book, right, she does a really good job explaining that once the big institutions are interested in something and they're buying, you're going to see volume. The effort and the result have to match. So if you're, if a big institution is coming in, just look at Oxy, right? Because he usually makes some stuff public. When he started buying Oxy share, I'm pretty sure you can figure out when Warren Buffett's buying on that stock. The volume spikes and the price spikes. And on the bearish footprint with positive delta, as price is falling, right? But buyers are entering longs aggressively, that can lead to an absorption. So the absorption, in other words, is basically the last two bullet points, and we have a slide for it. But if I'm aggressively selling and there's a buyer that's passively buying at the bottom, that means all the aggressive sellers are falling into the hands of passive buyers. So if you think about here, if I have a passive buy at 95 of 250 and this guy is selling, and I have enough demand here to absorb all of his selling, that's called an absorption. Okay. Same as on the opposite side, right? If you're buying here aggressively, let's say we're going up 103, 104, 105, and then 106, and 107, you come in and you're still aggressively buying. You see, aggressive buyers, but the price is not making higher highs. And you see negative, let's say, delta showing up. What does that tell you? Somebody's aggressively selling. They're absorbed. It's called, usually you can express on the longer time frames that there could be an iceberg order, especially at major levels of support and resistance, like weekly value area highs or lows, or monthly value area highs, lows, POCs. Those things usually have absorption starts to come in. If it's going up, market buying is aggressive, but the sellers are giving you all they can have on inventory at that level. Just like, let's say if you build products, let's say you make knives, right? And you want to sell a knife. Well, your cost is 40 and you have a lot of buyers offering a 120. Naturally, you would try to get rid of that inventory as fast as you can so you can then again buy a new one. If next time you see a lot more inventory getting sold at 120 as a seller of this product, what would you do next time? What would you do in the future?
Increase the price?
It's natural to increase the price. In capitalism, price is used as to maximize profits. You increase the price and see if the quantity demanded changes. If at 125 for the same knife, you get the same demand, you keep it there for a little bit and then you're like, yeah, 130 sounds about good. You increase it and then you're going to find and that's basically how volume profile is built. You'll find at what level your price of that product is losing, right, your revenue. Your profit margin, of course, the way you increase it goes up, but your revenue might stall, and that's what you're measuring, right? See how my profits, how's my total revenue being impacted as I shift the price up? Same thing in the market, right? In this way, here, right, as we're going up, I just wanted to cover the last 2 points here, this one and this one. So this is current, right? This is as of yesterday. This is NQ here. What do you see here? We sold off on this delta negative 1900. That's negative 1900. Volume is 237. Then you had some aggressive buyers come in here, right? And then you see us spike higher, but what's going on?
Delta's more red.
Delta's almost 3 times as red here. It's 2 times red as this one here. That's telling you as you're moving up, somebody's offloading the inventory. Okay, then you have something like this, right? Same thing on NQ. bearish candle with positive. I meant to say with positive delta. I think I copied this, changed that. Sorry for confusion. The bearish candle with positive delta. Delta, is it, huge positive? No, but it's in your mind, you should be like, okay, as we're selling off, there seems to be some limit buyers. Somebody's aggressively now buying this and saying, stop, this is good. I like it at this level. Because if you're buying something, somebody, is anyone in the market to buy anything right now? Like, throw it out. Dempsey, don't make any comments if you're not allowed to answer. Nobody. I like this group. You guys don't spend money. That's great. So let's say if you're in a market to buy an iPhone 15. Apple doesn't have a lot of sales, but their carriers do, right? Like Verizon, T-Mobile. When would you expect to have a sale for them?
Black Friday.
You're gonna have Black Friday. There's Thanksgiving, Christmas season, and especially if Apple is experiencing what?
Low sales.
Hello,
If
Sil.
they have low sales, they have to discount the price to buy it. Let me ask you this now. If tomorrow Apple sells iPhone 15 for $400, how many of you are going to go buy it?
I will.
Yeah, I'll buy it.
Yeah, most of you will buy it, right? And you will buy it because at that price you found value and you're going to become a buyer. And that's exactly what happens here. At this price, there's no buyers. They're selling. At this level, they're like, hey, kind of like at this price. So at this level, if this was an iPhone, they're like, yeah, we'll buy here. And the higher this delta here goes, the stronger the absorption is happening as these aggressive sellers are stepping in. The buyers are aggressively buying, trying to get hold of that iPhone. And then eventually, what's going to happen to the supply at this level? How long can Apple sell 400 iPhone at 400?
It's gonna get depleted.
No, it's going to get depleted. And what's going to Apple do to the Apple iPhone after there's no more inventory here?
Raise prices.
They're going to raise the prices back up. And then what they're going to do when they reaches 1500? All the supplies available. They're going to give it to you. They're going to try to sell as much as they can at 1500. Here, they're not going to try to sell as much at 450, bless you, because, they wouldn't be profitable for them. And the same here. Some buyer was here, seller was here, he sold. Some buyer was like, hey, maybe he defended a position. We'll take a look at it. And then he's going to look to bounce back up. Okay. Does these two slides correspond well for you guys showing this? I'll just change the text on the right here. That's pretty much indirect absorption there. So statistics, that's what we measure on the bottom. You guys see my charts, you'll have cumulative, you have volume, delta, max, min, and cumulative. What is volume? Volume is number of contracts traded. In this case, I'm on 30-minute candles. For every 30-minute candle, I'm able to see what's the volume, right? And is volume important when you trade the way we trade? I would say, hell yeah, right? I pay attention to volume a lot and I look for it, right? So if you think about, here, right, as we started, this is from 10 a.m., you have a really negative, right, delta, aggressive seller coming in here, and then look what happens, right? By about 1 p.m., we auction successfully. This is called aggressive selling, two stack imbalance right here. Meaning, at this level, wherever that is, let's assume it's 285, somebody was trying aggressively to get rid of the inventory right here. You guys see it? So the ratio is 132,816, so about what, 6 times? And then you have 5 to 3,000. So somebody's like, okay, well, let's get rid of the inventory. Then you had buyers previously here that defended that with the completed auction. So how do you know this is completed auction on the bottom?
0 on the S side.
There's 0 on the ask side. Does anyone want to explain that?
I mean, I can't.
Nobody didn't want to bring it lower.
Okay. You want to try, Drew?
Yeah. So, you have buyers showing up on the bid side, but there's no sellers on the ask side.
That's correct. So if there's no sellers, where does the price have to go?
Up,
Where did the price go once this one completed?
up.
It went up. Okay. Good. Everybody following so far? Is there anyone confused? Texas, Raj, are you confused yet? Following
I'm good.
along?
Yes. Good. Thank you.
So here you sold off, and then you see something here. There's two things happening here, right? Volume here, if you guys think about this, it looks like a skinny belly, and then it has like a little skinny belly here, and then there's an inflation here, meaning the bubble is growing here, right? There's another imbalance here. I don't know if you guys can tell. There's a decent imbalance here, right? And then you see the bid side and the ask side are both inflated. There's a lot of trading here. If there's a lot of trading here and you don't see price going down quickly, that could be a sign of absorption. And then if you look here, volume decreases and the delta is cut in half. Then you have, right, the POC of that candle, which is a benefit of a footprint chart. You see where is the highest traded volume of this candle. It's right here. And then you see us, we basically popped above there, right? We tested that almost imbalance right here. We came very close to it, and then we came back. But we came back to that POC here and basically look at the delta. You went green. You went green again on less volume, and then here you actually started buying aggressively, popped in volume here. But then what happens on this candle? Why is this candle fairly important?
Auction.
This one created the bracket for the market close. Did we break the auction on the bottom at all till we closed?
No.
No. So here you're saying, hey, the auction completed. On the top, Raj and everybody else, somebody got that item at that price. They got it, and the delta finished, right, at 3,800 positive. But then there was an aggressive seller. So this guy got the item, he's waving victory, and then the other guy said, well, I got a lot more for you here at a little bit lower price because it seems like you're interested. And look what happened. A really drastic imbalance, and the price went lower. Then you watch for the next candle, and you're paying attention here. Do you guys see the delta? I'm saying delta change, not the delta, but what is the delta change here?
Almost
What's-
7,000.
9,000.
9,000. Yeah.
10,000, yeah.
Actually,
This is about
10,000.
90,
10,000.
yeah, almost 10,000 here, guys. So if the delta switched 10,000 here, what does that mean? You completed the auction at the top. Are you telling me negative 10K on the delta? That should be a little bit of a sign. Like something's wrong, because this negative 6,000 is much bigger than the negative 5 here when we sold off. So you really think you're buying here? No,
They're aggressively selling.
they're
What's aggressive
selling.
selling?
Aggressive sellers, right?
Yeah, they're coming in here and they're selling. But now when you pay attention to this, right? Is there a point tool? Oh, there's. So now if you look at this right here, this was the completed auction, right? And they said, hey, the only way you're going to complete this auction is if you get initiative buyers and they're able to drive an offer and ask above this, right? 4,300. And then the same thing here. If you're able to find initiation and break this level, you're going to sell off. Okay. So you basically stayed in this scenario. I don't know when I had this, but in this scenario, you stayed here for the close and you see us trading in between, right? On this delta positive, you didn't break this POC. You had another aggressive buyer sitting there and he's defending this level here. This guy is most likely, in this case, was defending this level here. And there was failed auction here. Failed auction means there's no zeros at the top or the bottom. So that's how quickly you can tell if something is completed. If it's completed, it'll have a 0. If it's on the bottom, it's going to be at the ask. At the top, it'll be the bid. Okay. So everybody knows completed versus failed now. You guys should not ask, how's that? Trick question. How would we know on the TPO profile where is it completed or failed?
We would have single letters.
Single prints.
Single prints means what?
Completed.
Completed.
Yeah. Single prints means completed. And if you have more than 2 prints, right, that means failed. They did not agree on the price and there was no winner. Okay. On the bottom.
Question.
Mhm.
I have a question. So for the 3 last candles, technically the auction did not complete.
That's correct.
So what does that mean? That price will revisit? Because there's that strategy where we look for the
So
unfinished
for
auctions.
unfinished auctions, or I use them for profit taking or knowing if there's more levels to hit below. So if I was, let's say, to short here, let's say we crack this level and I want to short, what would be my target?
The cluster, yeah, right
Probably
there.
here.
Yeah.
But if we break this cluster, what should I expect? The most likely they're going to clean up this failed auction here. They're going to make sure that there's a completion to this.
Okay.
And then if they break this, then I would know, hey, you have unfinished business here. Most likely you're going to come to 42.57. That's exactly how I use failed auctions, right? And if you look here, this was a failed auction and look what they did. They came back, they completed, they cleaned this one up. Would I count this one as complete? Probably not, right? Maybe this one is a 43.03 in this case. So they completed this auction here. And this guy was pretty adamant that we go lower from here. So we went lower. So I use finished auctions almost as, I would call them as magnets. If I see one in the range I'm trading, if I see a failed auction and we're trading here and I see a failed auction here and I'm looking for long, it'd be really scary for me to take a long if we have a failed auction somewhere at the bottom, especially if it's an active auction, because most likely they're going to dip below completed. But you have to know where that dip below goes. That's based on that history to the left. I would have to know where's that completed auction. I'll show you guys here shortly on the live chart. Actually, let me go back to it now. I wish all of you guys would have 49-inch screens. Okay.
Me too.
I got you. I got one.
Makes my life a little bit easier. Let's see. Okay, let's go there. I'm gonna zoom in into yesterday's auction here. Okay, so I was trading live here. I believe Drew, you're on as well. I mentioned here, right, as we were trading, I know Bean responded to it. When we open here, right, so there's your 930 open. Why was I a little bit bullish on yesterday? Here's our open, 930. What do you see that was like, okay, well, something's telling me that you can start ripping here. Let me see if I can just make it a tad bit bigger. In this case, we'll do this just so you guys can see it. Does anyone get it? Yep. See it?
Completed auction.
Okay. Completed auction right before we had a massive sell-off at 70,000, right? This is your NFP news or whatever, non-farm payroll news. They came back and then you see
Delta.
a little bit of absorption happening here. The delta starts with volume of 36 at 9. So they basically stopped selling here. Then you see they re-added to their long position here. I don't know if you guys can see the green imbalance. There's a decent imbalance here, right? 3-1. So he sells there, but then look, this guy that was buying there at 9 o'clock, what happens here when the price dropped? The auction completed. Does that make sense? Zeros at the ask, and the auction is done here. So then if you look out and you kind of zoom out, I'm on 30 minutes. I can potentially go on 65 minutes, see what it looks like so you guys can. Where am I now? I don't know why did it change that? Okay. I was gonna bring it so you guys see more data, but I'll have to keep scrolling. So here we completed the auction with the aggressive buyers. This guy defending basically his position. You know, he added long here after a massive sell-off here. And I would say when you look at the sell-off and imbalances here, right? Do you guys see much size here? There's not a lot of size, right? I mean, it's not like they were selling like against a lot of volume. So there's not a lot of volume here. And that open, I said, there's a high chance they're going to fill all the way up, right? On ES, I was targeting 42.90s. And then you see here, look at this. What does this represent here? Is this a true imbalance?
Skinny belly.
These zeros, is this
The
a
sell-off.
true?
Oh,
You guys see these zeros here?
There's no one buying.
Well, it was a news-driven event, right?
It was a news driven event, but when you see zeros like this, right, and it creates an imbalance like this, don't trust it most of the time because those most of the time are what? How about this?
You want to see imbalances at the
Ghost
beginning.
orders.
You want to see imbalances at the beginning of a trend or at the end of a trend.
Yeah, but when it's zeros, it means there's some stops being triggered.
Mm-hmm.
So if you're seeing on the ask, right, if people are running long stops, was somebody long here? Well, of course they were. Somebody was betting long and then they basically triggered them. They ran them all the way down. They got stopped. And what did those people that were long here had to do?
You had to cover.
They had to cover. So they had to buy it back. They bought it back, right? And then, I mean, they just kept killing them. And then, of course, we know a completed auction. Then you're going to the right. And you see here, look how much reaction they had on this imbalance. Not much at all, right? They didn't really care too much for it. And here's this one while we were on. What is this green spot right here? I'm talking about this right here. Does anyone know what this is?
imbalance.
So stacked buying imbalance, meaning you have order pairing that's looking like this, 79, 67. And this means there's an aggressive buyer here. And that aggressive buyer was needed because what happened on a candle before? There's an incomplete auction,
Fail
right?
auction.
So you're gonna need some, aggressiveness to drive that price, right? And they did, right? The auction continued and it went up. And then you see here again, completed auction, right? For me to sell that $100 bill to you guys, what if I added a vacation to it? Well, most of you guys will start offering more dollars for that $100 plus vacation, and then the auction would continue. At that time, it was closed, but if I added more stuff to it, then it continues. Then you see again, right? They came back right to the candle POC, right? And if you go here on individual footprint, here's your, it's called high volume node and footprint charts. I call it candle POC just because that's what it is. Completed auction, aggressive buyer comes in, and we continue. Then they had a little stall, right? And this was kind of boring to watch during lunch. And you see them doing just consolidating here, right? You see them, a little bit of stops. And then they came back, they drove the price down right to the high volume node. Skinny belly right to the high volume node. Failed auctions as well. Some aggressive buyers stepping back in. And then just think, right? What did this look like to retail traders here?
Bull flag.
Yeah, it looks like a perfect bull flag. And what do you think they do? Well, let's take a look. What do people do on bull flags? What kind of orders do they do? Limit orders? No, they don't do limit orders. Most of them do market orders, right? And it shows. They're doing market orders. Then there was some market orders here. Why would there be market orders here? We know because you probably broke that trend line, right? I was trying to draw, I was figuring out where it was. So if you think about it, this was the trend line break here, hence the market orders we saw. Then you have the two highs, right? Because then you have the ICT traders. Nothing wrong with that. I'm just telling you to know the different participation, right? Then you look at this. So we had the buyers there. Right here. And then there was aggressive buyers right here as well. Right? So each one of these almost had an aggressive buyer because they're responding to what you're seeing here. They went higher and then look, then you're basically coming the break of the top, you come back and guess what? They came back again, but look what's happening with Delta here. It's still, they're selling and then it keeps going, right? They continue. This was a pretty good Delta, but this was your warning sign of what right here? Why is this a warning sign of, hey, it's 2 o'clock, last hooray, be careful? Why is this one here fairly important to notice?
Is that a short squeeze?
It's 2 o'clock. The time in the markets, it's 2 hours left, right? I mean, you just ran 300 points and you have a completed auction here. You're completing the auction, right? And what about volume? Pay attention to volume. So 10 a.m. you're averaging about 16, then lunch, usually it's cut off, but then look at the volume here. It's losing steam a lot. Then you have another push with a lot of aggressive buyers here. And then here comes, the sell-off, right? As they're coming in here, look at this candle here. Everything they did that day is pretty much negated in terms of aggressiveness here. They really let them have it, right? They sold off right from the top. Let me just zoom in a little bit. Whenever you change the tick size, you have to zoom in. Okay, and then you zoom in and you see, okay, well, I see what is this guy doing here? Why is the green here? Does anyone know why is the green here? Why do you guys think there's an imbalance at this level here?
Aggressive buyers?
But why? Why is right here?
Retail hopping in late and trying to buy it up.
Just retail playing momentum breakout. This is resistance, and now they're gonna get in here. This was your candle high, right? If that was the candle high and they're looking for breaks, they're gonna get in there. And that's where the auction stalled last time. And look what happens. They wanna break that auction and boom, they need initiative. They need buying. And they go higher. And then you look here and then of course completed auction and then phew, drive. So if you're looking to short and scalp on these levels, once you lose this level here, high chance you're gonna go and look somewhere where you had how would you know where to play this? Like, just thinking out loud, how would you know if you're playing scalps? How would you know where to get out if you shorted this?
Look for a volume cluster to the left.
Yeah. So one would be that you had some here, right? You had probably an exit there. You had an exit here. Because if you took this at 146 and you catch 135, not the best return, 12 points, and you zoom out, where's the high probability here now when I zoom out? Where's the high probability that they're going to return and probably catch a bounce? I'm just giving you.
15105.
That's a good level. Why that level?
You've got 2 POCs there.
Yeah, you have 2 high volume nodes here, so there's a high chance that you're going to come back to this, right? So this is just footprints, guys. This is the only thing I'm showing you here is footprints, right? So here's the 830 open. Now, if I want to see, right? Let me just increase this to a little bit bigger. If I want to know what's the level that they would respect, look at now. This is just delta here that's showing for this run up, right? I see that there's buyers coming in. Look at this level right here. So right around 1595, there's a chance that you're going to catch a bounce. Does that make sense? You're playing probabilities. You're not playing, what I think is going to happen. You're playing probabilities, and the probabilities of a bounce. Let me just change the setting of this. Okay. The high probability bounce is going to be here. So you had one here and you had one here, just based on delta. Then if I switch this guy, now we're going into volume idea, right? Why do we bounce here?
High volume node.
It was a big volume node. I'm not including the sell-off. I'm just including the top. So if I come here, this was a high volume node, and that was a pretty good, opportunity for a bounce. That they're going to come here and bounce it. Let's say tomorrow, or sorry, Monday, well, Sunday 6, when they open, they come to this level. You could probably catch, I would say, about 30 points from this level. Right, there's a high chance they're going to come here at 11-ish small rejection, and they're going to continue to this volume node. Because if this plays down, that means that these high volume nodes are going to act as a magnet when they go down here, right? So it's going to look like something like this. They go here, and they're most likely going to come back depending on how that's created at that time when we open. But I would look for a high volume node. And footprints, of course, have high volume nodes because they're created based on a bid and ask size. Same thing as volume profiles, right? At volume at price just tells us how many contracts are traded at that level. Okay. Does everyone know what delta is? How, like what I mentioned just now, what I'm sharing here on the bottom, what you guys are seeing here on the bottom is just statistics. It's basically your statistics tab of delta and how aggressive the buyers and sellers are. And it summarizes it for you here for each bar. So for instance, this bar right here had 60,000 volume. Somebody go on mute, please. You have 60,000 volume and the delta is 2,200, right? Right now, after hours, you don't have the min and max, but then you have, cumulative delta as well. What I care about the volume, delta, max, and min. I look at cumulative, but not as much. The max delta tells me what was the highest positive or highest delta that was on that candle. It doesn't have to be positive. This one could be negative too, right? That it was the highest negative or highest there. And then the minimum was, let's say, negative 5,000 and max is negative 2 and we close at negative 1. Is that bullish or bearish?
Bullish, right?
It's bullish because if my max is, let's say, if my max was, let's say -2, we said, and my min is, that you guys love the handwriting there. If my min is -5,000, I'm just gonna put 5,000 here. 5K, right? And the current delta closes at -1. At one point, you're -5. You know, your max, you're really started off as negative, but you closed at -1. That would make sense because at one point you're so negative on selling that you close at -1. That's a positive thing. That's called absorption on statistical bottom. Does that make sense to everyone?
So the closing doesn't have to be within the min or the max.
No.
Okay.
It just depends where they go. Let me hold on. Let me think what you asked. The closing doesn't have to be between the min and the max.
Well, the example that you showed.
It has to be. I'm sorry. It has to be. Maybe I put the wrong number. It has to be between the min and the max.
Okay. All right.
Yeah.
Gotcha.
Yeah. Because the max would measure the max of that candle, right? Not after the close, but during all of it, right? So, but if the min dropped to -5,000, and now let's say your current, the delta shows current, right? If your current is close to 0, or let's say green, well, that's a big switch.
Yep.
Right? You're going from something that was -5. If you just put it on a linear line, you go all the way from the left, like kids learn in school, from negative side to the positive. That you have to travel a lot. So there was a lot of buyers that came in and absorbed that. And that's one way I spot absorptions on charts, right? So I'll show you here on, let's look at daily for a second. What's happening here? Who can spot the absorption just off of this? So you have some aggressive selling here, decent volume, and then look at this. There's some buying happening. Neutral, close to neutral, volume dead. You're bracketing here of this candle and this POC, but then on daily, this is current, right? On NQ, you have a big pop on volume, and then what else do you have? Negative delta. Major negative delta. I haven't seen this negative in a while, right? I mean, if you go back, there's one here, but that's contract switch and stuff. When we rolled over, right? It's not the best, but this was a pretty big sell-off here. And this one is just like that, but just a little bit more volume. So you're pushing up. This is one of those from the PowerPoint that I highlighted right here. Bullish footprint with negative delta. That's pretty much the example right here.
Friday was disgusting. It was like negative delta and just kept pushing up and up and up. Super negative delta.
The hedges were off on the quantitative side, and they were able to drive that higher, right? So they did that. So the delta, what delta is, we're speaking a lot about it, is basically your net order flow, ask minus bid, right? When the green delta shows, that means shows aggression from buyers, and the red one is aggression from sellers. A green candle, a negative delta, shows divergence to a downside. You should be aware of these things when you see them on any time frame, and I'll show you an even smaller time frame. They're not always clear in terms of divergences, right? So this is what I try to explain now. Closed bar has minimum delta of -4,500. Bar closed with delta of -400 at support. In this case, this is a good example of kind of like a hidden divergence, right? You wouldn't be able to quickly spot it, but you got to look at the max min and your close and be like, okay, you were here, you're able to absorb some of that negative, and you close -400. That means you had a delta change of 4,144, right? So those are the ones that you have to kind of pay attention to and really keep your eyes open when you see them. Does that make sense? Okay. All right. On smaller time frames, you can see them a lot. I mean, you have to change the size here, but actually, I don't have to. Right. So here, if you just take a look at it, let's see, what time is this? 3:45 here. So here, for instance, if you see, there's a few things going on here, right? At 3:27, the volume is cut down in half, the delta's cut down in half, and then there's something happening here. They have a completed auction with aggressive seller coming in, right? I'm only on 3 minutes, so that's a decent volume. And they're picking off and then they're selling, and they came back right to the POC. And you see, they're not even coming to this POC here at all. And you're able to sell off. And if you look, they're coming kind of directly to this POC here, right? Maybe you wouldn't hold at 330 all the way down here, right? From whatever that was, 94 to 71. But if you're planning the trades, right, this is not a bad. You had a completed auction here. Somebody else coming here and it's completed. They're aggressively selling. And the volume is telling you here, here's volume. Again, volume is less, but they're selling. Volume picks up and they're selling, right? And it's not completed auction here, right? And then you see finally what happens here at 3:45. What happened to this guy here? Why is this guy here? What happened to this dude or lady?
Absorb.
Well, this one here might have been a trapped seller, right? He saw that we were selling off and he went in heavier short, and then the market dipped a little bit and then phew. So he might have been a trap here, right? You see the volume is picking up, and then the 3:45, what happens to this? Is this a valid candle? So how would somebody play this? Remember, this was the high prior. And you see here, we have a completed auction. They came back again. Think about that dollar auction that we had. Somebody offers, 100 and installed. Then you come in and somebody offers 150 cents right here, and nobody bids higher. Where would be a good short to take if you're playing the close? Well, you had an
90.
auction. Yeah, they had an auction that completed here. Anything below that is going to drive the auction in the opposite direction, right? So you came here. Once you lose this, there's a high chance. Look, another completed auction here. If you took this, you could drive it down all the way. And I mean, you can target a few things here, right? Depends how you trade. You could target this low again, because every POC on this candle is what? Is it going up or lower?
Lower.
It's making lower lows. So the majority of the volume is being less on the downside. A lot of volume is trading lower, and they have these called spikes. They're pushing up. So now, let's say we lose this 70 level, we could look to see where's the next level that they're going to bounce, right? And you see that there's a lot of, 3 minutes, there's a cluster right here, a big cluster, right? So if you're using 3 minutes, you have two high volume nodes that are pretty much lined up here. Maybe something like this, and look, you had a spike, and what's the setup that I play called in terms of
Volume setup.
Yeah, this is my volume setup. This is where you call volume accumulation. If I was to even just look at volume from here to here, let's see. Oops. Right. So yeah, I usually grab the highs, right, and I look at it.
Or SR.
I call it volume. SR is a little bit different, but yeah. So if I look at this, here's my volume. And where did we bounce?
Right off that volume shelf.
We came back and poof, hit it perfectly. So on first retest, and I'm telling you how I trade, this doesn't mean you have to. When we create a balance like we did here, and then you have an imbalance, you broke that balance, you're putting higher highs, right? For me, if this was my balance right here, breaking the balance doesn't mean you do this. You go here and that's not a retest. I want to see a range being created, and I want to see at least a couple of candles, make higher highs. So this made higher high, they popped higher, right? You have a nice little pop. When you come back here, I go along first try. Okay, and if you look, how do I protect my position? I'm asking you guys questions because I'm really giving you how I trade this. I'm just gonna go from the beginning so you guys see it. Okay. How would I play this? I'm asking you, how would I execute this trade here?
Go long at 55.
Okay, I would probably go along somewhere around here. You know, I usually buy some at the beginning. I buy here. Why do I buy here? And why do I put a box around the POC?
It's where they accumulated.
Yeah, it's a zone. I don't play a single level. I don't care for those. So this here becomes my zone, and the heart of that zone is where? It's right here. It's right here in this level. I don't know what I did there, but that's pretty cool. Okay, so that level becomes my heart. So if I put a place order, let's say one contract here, would I go a 10 pack at 330? Probably not, right? That depends how my day went as well. If I was negative or I need to recover, then I might take a bigger, gamble. But when you're making higher highs, like you are here the whole day, I would say you didn't stop. Here it comes, 10, then you have higher highs, you have of course a bull flag for the retailers, and then you have an imbalance again, and then you accumulate and you pop. I would say this is a trend of volume accumulation setup. Basically, you're accumulating and you're waiting for a retest here. Does that make sense? So now you're coming here. Where would I put a stop loss here? Hold on one second. Wow. You look good, bud. Give me a high five. Wow. The middle child walked in.
847.
Okay, go over there, mom. Bye.
Um,
You can't work with me today. Nope.
55.75.
Okay.
I
Anyone
can't
else?
wait to see pictures of him in his costume.
No. Yeah, we went shopping the other day.
852.
847.
I typically hide behind the shelves, meaning if I'm taking this long, I don't have to go hide here, guys. I mean, who's going to give them 15 points at close, right? I don't give them that many points many times, right? Especially if my size is higher. If I'm going 10 contracts, for 15 points that I need to nail a bigger level, not 3 minutes. On this, I would go slightly below here, right? Let's say I put this level, and I don't keep them at even numbers. It would probably be, something like this, 54.75. So if I'm catching, let's say my average is I buy one at 58.75, and then I buy one here. So average, let's say 57. I'm giving them 3 points risk. How many points do I need for a 3-to-1 trade?
9 points.
It's 9 points, guys. Come on, you guys should all be answering 3 times 3. Come on. If I'm targeting 9 points, how would I find the level where I want to sell off? The way I find it, guys, I have different tabs and I consolidated them here so you guys see that I look at, different screens have different purposes. I have this, I have sometimes this on my charts. I look at different data like this, this one is weekly profiles. Then you have the daily sessions on Delta. I look at different stuff so I can make a decision that works in my favor. And then I have free lanes chart, like let's say this one that I'm doing with you guys. I would draw this right here. And I usually start from the top, meaning from this candle here, and I would look at volume here. So where would I exit?
$73.
If I took this here, right, and I can just make this a little smaller.
Like 67.
All right, let's zoom in. And Okay, so let's take a look. If I'm getting in here, let's say averages for purpose of math, let's say 57, right? So 60 would be 1-to-1. You have 63. Then you have about 60, 66 here, and then 69 increments of 3 somewhere here. I can take it statistically 3-to-1, right? You would have a shelf here that's small at 63. So that would be 2-to-1 trade if I was to take it from 57, right? It would be 60, 63. That could be a first exit that you trim here. I could take a position here because this is the candle sell-off POC as well. Then if you look, just from the volume perspective, there's a little node here, right? If I have multiple contracts, I can trim here, and then my ultimate, could I not trim here? So I will have 3 levels if I want to play this, this, and this. Do I leave runners more times? Yes, I definitely leave runners, right? But when you think about, I only included the sell-off candle. What do you think happens if I take this and extend it? Like here, what do you guys think is going to happen?
POC will go up.
Yeah, POC is going to go up. Why does this matter?
Because you're trading on a 3-minute chart, right?
Yeah, I know I have a lot of data, and why this matters is because this was the balance right here, and this is the imbalance, right? Market does not always go, well, it doesn't go from bull to bear, right? It goes bull, consolidate, bear or bull, consolidate, bear or bull, and then it keeps going down. Why I use value areas is, okay, well, this is my value area low here, right? That means volume below here is going to be what? A lot less than the volume was up here. So if I wanted to include that data, depending on how aggressive the market's been, if market's really not moving much, I gotta know that, right? Based on the date type. If we're in a bracketed day, meaning a deep profile shape, the distribution of volume profile is perfect bell curve, then most likely I can't expect these type of points to be made quickly. But when you're doing what you've been doing, I can expect a little bit more reward because there's a lot more risk too. So if I wanted to, yeah, I can definitely target. But now if you see the shelf, it's a pretty big shelf here. So that's not a bad target to take profits. If you're going in here and 3-to-1, this is 74. So if I wanted to manage a higher probability trade and I wanted this to be exit, I didn't want these to be exits right here. What do I need to adjust? If I'm going long here, I'm going long, let's say we said somewhere from here to here. What do I need to adjust? Do I have to adjust anything?
Only if you want to increase your risk to make it 3-to-1 or to
Ah, there you go. And that's the point where a lot of you guys fail.
What he
Is
say?
I need to give a little bit more space on the risk side. Because this right now from 57 to 75 is a lot more than 3-to-1 based on the risk that I identified. My risk is 54.75. I'm giving it what, like 2.25. And I'm expecting to catch 57 to 20 points for 2 points. That's not fair, right?
No.
So what I would have to do, if I want this trade all the way here, I can't give them this risk right here. I need to give up a little bit more if I want to catch more. This would be more of a lotto trade. If everything works perfectly in your analysis and you don't get any drawdown, it might work. Rarely do you get this in the market because guess what? They see where your stop loss is if you enter the stop loss on the tape. And if I see your stop loss is here before I want to make a move up, what do you think I'm going to do as a market maker?
Take it out.
hit it.
My goal is to, excuse my language, but to fuck you up and get you out of your position so I go without you. And remember, this is a zero-sum game. If I make money and me and Rockets are playing against only 2 of us in the market, guess what Rockets doing? he's losing the same amount of money. And the market is not, it's a zero-sum game. Somebody wins, somebody's going to lose. Somebody lose, somebody win. So in this case, I would have to be a little bit smarter, right? From the risk perspective, wouldn't this be a solid shelf to hide behind? I mean, you're giving them, in this case, 6 points. So I need 18 points back, right? So my risk would be, here. And my reward, God, I love trading view. And my reward would be here. Does that make sense? So now 57 to 75, what is that? 18 points right on. This is a high probability trade. This one here, setup is good, but what happens here for most of you is that you oversize here, and when the tick goes against you and you're looking at your P&L, what happens in your emotion state?
You pee yourself.
Most of you guys shit yourself and you're like, close, close, close. And then, then it goes, and you're like, oh man, I'm not good at this. This doesn't work. But logically, the idea was good, but statistically and logic was not good. Think about first question you should ask yourself as you get in a trade, can I get my risk 3 times here? If there's no room and the answer is no, then the answer is you don't take that trade. Does that resonate? I'm sure I can find a lot of you, if I look at your logs, I can find at least 10 of you in 10 minutes that got stopped out because you did not think about this. Bean, we traded live. I said, relax, stay in the trade. What happened after you trade when we were short?
I stayed in the trade, and then we moved it down after a little bit, and it ended up hitting us when you went to the bathroom or something, where you get a drink, but it's still, we made a good return.
You made more than you would have if you were not.
Normally. Oh yeah, totally.
So sometimes you have to, instead of using your emotions to drive the decisions, right? Just look at it. For instance, here, right? We sold off, and then you see right here, I'm just giving you how the market moves, guys. It's fairly simple. This is the balance, right? And you see them here. There's somewhat, people are buying, not very aggressively. They're buying. They're not selling. That's the important part. And then you see here, they didn't come nearly as we needed them to come here for a decent entry long here, right? But we could have identified it based on volume. This is just delta, showing you aggression. There's a lot of aggressive sellers right here at the bottom. Okay, let me ask you this. Do aggressive institutions and consolidation try to sell at the bottom of this or at the top of the consolidation?
At the top.
The top.
Of course they're going to sell at the top. They're not retailers. They're not going to sell everything they got at the lowest price. As you are looking for breakouts, that's where they're looking to sell. And this is a perfect example. Who's looking to buy the tops?
Retail.
Do you see the big green delta? They thought we're going to the moon. We're going to go much higher. And the market said, stop right here. Right. And then you see, look at this one right here. This is a pretty big delta right here. I'll just extend this here. And look where we came to reject multiple times there. Twice, I guess, at the end. This is somebody, you're trying to get into a bar and somebody slams the door at you twice and you have a broken nose. You have a completed auction on both ends from the most aggressive point on the top of selling. They're literally telling you no, like, hey, not here. This is a no zone. We're not interested above here. We're selling. Does that make sense? At least this is how I think about it when I'm looking for a trade that I don't know who was let me find my this chart. So is any questions on footprints? Let me just guys, if you have questions, ask me while I'm here, because Once Monday comes in, you're trading.
I have a question, Shorty.
Yep. Go ahead.
That green delta that you were pointing at the top as a like a profile. Sometimes I like I'm not like you're like of course delta is showing aggression, but could that big delta at the top be like a market maker selling at the ask, like limit selling, or or does it not really matter at this point? It's just a wall it can't break through.
At this point it matters, right? Because when you see delta is created by, where's the order executed? If the order is executed, if you look at the tape when we were trading, sometimes I enable the tape. Is it as you're trending up, you're buying, and where are you related to the price? Where was it in relationship to the price? See, if you bought a bunch here, limit orders at the top, right? Where we are at the resistance right here, right? If you're buying at the resistance with limit buys, I don't believe that.
No, I mean not limit buys. I mean like selling at the ask, because that would be show up on the positive side, right? Like
If
on
you're
the right side. Mhm.
Remember, one negative delta is me selling at the bid.
Mm-hmm.
That's -1. One positive delta is me buying at the bid, at the ask, I'm sorry. Okay, so if I'm buying at the ask, it's +1. If I'm selling at the bid, it's -1. And this bid's telling me it's 228 green. This line's telling me 228. So what does that tell you?
Positive.
That
More
means
people are
they're aggressively buying here at the top. But then you look at the delta, right? The actual delta right here, cumulative on this candle here, they offloaded on them right here. Could it be, you're approaching close and people want to take profits on the Friday? Yeah, there's a lot of freaking scenarios. But your point is, if I'm at the ask, right, and I'm coming like to sell, well, your order would sell, you would still be filling regular order, right? On the bid and ask size, you would not be red or green. You're just getting filled at the ask there. You have an order sitting at 100 and somebody's buying there. If somebody buys aggressively, that's going to show up as an aggressive buy and coming at your ask sell side. That's still a positive. So what you're
Okay, yeah, I was a little bit confused by that. All right.
So you're still valid. What you're thinking is valid, but where did the price go from it? If the price went higher, we can assume that the ask side seller, right, the passive seller that was sitting there is what?
He's consumed. He's
consumed.
down on
He's
his inventory.
absorbed. Yeah, he has no inventory. But in this case, this seller here, what happened to him? Well,
He had more supply than they had offers.
Bids, yes.
Bids, yeah.
And that's exactly what happens. It looks green here, but then, if you look at it, right, you see this guy here on this candle, they're aggressively buying. They're playing momentum. But they hit up maybe in like a little iceberg order, an iceberg seller here at institutional, and he basically drove the price lower. So you're right, but it becomes important because if you're coming up to a resistance, you want to be aware, right? If I was to shift this, here now, let me just remove, and I'm not looking at anything right now besides the volume. How is volume traded here? And if you look here, you're looking at matching right here, 93, 197, right? They're going to match because I'm just looking at volume that was traded. For every buy, there has to be what? A sell, right? So I don't even need the double. I can do single and I can see the volume that's happening here. At this point, you see a lot of volume is stuck at 900 here. So a lot of volume is traded, whether it was a bid, ask, who cares? But where did the price go from it? So you can assume what you assumed at this level, there was what you said, that there was a lot of passive sellers sitting here waiting to get rid of their inventory.
Shorty, I got a question about this. If
Mm-hmm.
let's just say an iceberg seller comes in and wants to sell like 10,000 contracts. If they're
Mm-hmm.
sitting there at say 905 or whatever kind of close to that top, and they
Mm-hmm.
shoot through it, they wouldn't be able to shoot through it if they're sitting there open, unless they is a slight delay of them slapping in place, right?
There's high frequency trading. There's a little bit of manipulation, short laddering. There's things you can do when you work
Mhm.
together.
So
I don't
it
want to
will spike
publicly.
through
There's
the iceberg, even though it's there, basically.
what did Yankee do on a $100 bill?
I don't know. The yank. I don't know.
Well, earlier we auctioned the $100
Oh, I'm
bill. Yankee,
sorry.
what was your offer?
I was late.
105.
He offered 105 for it,
Oh, okay.
while the highest bid was at 99.99.
Okay.
Does that 105 get recorded? Yeah.
Yeah.
Would I, as a seller, take that 105 and close that auction? Yes.
I see. So somebody could be placing the order well above to buy it because they want in so desperately, even though the iceberg's there, they're bidding over the iceberg. Basically.
Or to trap you.
I see. Okay.
There's the side of the manipulation. If I trigger over a resistance, sometimes you see us gap up
Mm-hmm.
with passive auctions above resistance. We've seen it a lot this year. I would say more so than any other year.
Yeah.
Where we just basically hop over a level and we don't come back to revisit, like the one on the June-July contract switch. We just kept going over it, but that also happened to be a big level before the contract switch, right?
Mm-hmm. Yeah.
And we just now, June, July, August, October, we came back for a visit. So once they're able to get over that level where there was potentially some program stuff to sell, that algo is not triggered. And those orders are still waiting there, but they're only going to sell once you dip, and then it's going to accelerate that. So sometimes they do passive auctions. They do it on the news events. They do it on the earnings. They do it, and they try to, if I was opening, let's say I open and I put 14, 9, 10, right, orders buy, well, they're hoping that it just picks up and continues down and it doesn't fade into the gap. And most likely, when people see a gap, oh, they're going to defend it. But it's probably that guy wanting to defend that level because he knows that won't be able to get above it if, it wasn't for the passive auction being triggered. So, but that happens a lot faster, I would say, than, a human eye can figure that out. Okay.
So then, Shorty, I know you like to look at the tape sometimes when you trade, but then I guess you would get the full picture, like looking at it with level 2 and seeing the sitting orders.
Yep.
Like that level that we were just talking about where the passive seller was.
That's correct. Yeah. You'll be able to see that. And that's why some people, you can trade just off of level 2, right? But your eyes will hurt a little bit. But you can definitely do that. Yeah. And then level 3 would not be really helpful for day trading, I would say.
I have a question on completed and incompleted auctions.
Mm-hmm.
So I'm using Tradeovate because I'm on a Mac, and it basically only shows tick size versus where you can use points. Does it matter if basically I'm showing completed versus incomplete, or complete or incomplete versus what you're showing, or does it not matter?
I don't know on Tradeovate what's the default. Like for instance, right? Let me go here. If I change this to 0, right? It's just basically 1, let's say minimum. If I change this is going to be a true auction and where it went each price level without combining any ticks, right? So I see at this level, definitely completed auction, right? Because if you go to the lowest level, that's telling you at each level how many orders I had. If I was to increase the tick size here, right? So let's see. So I'm going to say now at that level combined 4 ticks, right? And you see now, well, in that range of the tick size that I increased, it looks like a failed auction. The best is to see it, zoom out, change it to the minimum that you have. I don't know what they do, right? If it's 1, I'll be able to see, you know, this one is completed. This one was a run stop. Let's see on the bottom, completed, right? And completed and failed. So what are the odds, right? That your trade of 8 uses different? I would say probably none. If you go to the minimum number on the tick size, you should be good identifying. So tell me, you know, if you have it up. If not, check later. Look up this candle at 3 o'clock on 30 minutes and tell me if it's completed on your end or not. And then we'll check, see what is it.
Yeah, I don't have it pulled up right now. I
No,
think
but
it
later on you can check, right? And we can figure out, right, how they do it. But I would always lower it to the lowest level and see, right? You know, sometimes I have to play with it as well on different time frames. Like if I go on 5 minutes, I just don't like candles being when I'm trading so big, right, that I can't see much. So
Yeah, I'm just saying. Yeah, trade of 8 doesn't give you the option. It only allows you to do tick size.
yeah, so I would lower it to the lowest level and look for failed auctions.
All right, thanks.
Okay, what else do you guys have? Any questions on footprints so far? So what we covered so far, we indirectly covered. Does everybody understand how delta is calculated? Green means aggressive buyers, red's this, it's basically ask minus bid. And it shows your aggression of buyers, right? Then we talked about the footprint statistics on the bottom. Hopefully you guys understand it. We talked about failed auction, right? Where's the failed auction? So we talked about unfinished auction or failed auctions, whatever you want to call them. Some people call it poor high, poor low, just so you guys know, on TPOs. You can have that as well, and that's also on the slides below. Any question, TJ, or anyone on absorption? Did I explain it to a level you guys can understand it and spot it? If not, just ask questions. Okay, here's 5 minutes, right? I'll give you another one. We're selling, then you have another, they come back to this POC and the seller reestablishes, sells off, and then you see, right, at 4 p.m. here, probably not the best time frame, but you see that, moving down, we have some positive, I don't know the min and max, but you see that we are absorbing and we're taking out the selling here. So there's some absorption. Let me go on something bigger that would play a role. So let's take a look at this at the top here before the sell-off on the news. So you're going up here, right? And you have a lot of signs for selling, right? So you have a completed auction, another completed auction. Then you look at the volume, up, same volume here, but the aggression on selling here is really, really strong. Then you look here, somebody tried to break out and cause, price to go higher, but it failed. And then you see here, they had some fake imbalance and then they brought it back. And then you see, there's really no absorption just happening yet. There's volume's picking up, there's selling, and then there's some happening here, right? We will have to go on some time frames. But if you look here, the delta picked up and they're like, okay, well, it looks like we're going to go higher. So these sellers here got absorbed. And then not really aggressive selling at this point, right? Right at 8:15, not very aggressive. And then you see here, I don't even know how you call this. At 8:30, right? The news candle just drove it down, but not really necessarily negative delta. And this is where the absorption truly happens, right? You come here, the POC of this candle here is pretty, I would say, important when you have sell-off candles and you have absorption. I usually look for that pinch. If the POC is on the bottom and we can crack higher with positive delta, that's usually my entry for absorptions. So here you came in and these are stops, if you guys remember. these are your stops, right? Look here, both of these. You have some stops, you have some zeros here, and look, the green delta spikes. There's volume increase here. You see the the balloon being formed around the POC, and then they're able to auction much higher, right? They didn't really give you a lot of retests, but they did give you clues on the completed auctions right here. And I think being you're on live, and when I mentioned this, hey, there's 2 completed auctions. There's a high chance we're gonna rock it. And of course, the rest is, I would say, history. So absorption wise, is everybody good spotting them? Occurs both ways. So
Hey, Shorty, is this being recorded?
yeah.
Session? Oh, okay, good.
Mhm.
I think it just takes practice and screen time.
Well, that like anything in life, right? I mean, just because you graduated to be a brain surgeon, I don't think as soon as you get that, you're gonna go and open brains, right? You're gonna
Yeah.
have some practice and watching, and starting with scissors and small, and then you're gonna get better at it as you do more of it. And nothing different in trading. And I think you can make more money in trading than you can being a brain surgeon. So don't expect it to be shorter payback period just because you're not cutting people open for money. So I agree. Yeah. Whatever you learned today is if you applied. And if I ever said no to any of you when you guys messaged me and I didn't respond, then speak out. But I usually will respond to you if you send me a chart. Hey, I'm confused or I need help. I usually respond. And for newer people here, if you do commit yourself, you read the PowerPoint, you read the Douglas Trading Zone, I give you guys free one-on-ones, pretty much unlimited. If you tell me I'm struggling, I need some help, and many of you on the call here have used that opportunity where we met up, we put a plan together, and many of you, for mental side of trading are on probation with me, right? Where we have a plan and you guys are sending your plan back to me daily and I review it. I do that, right? I do that for free. I don't charge you guys for that as long as I see that you're committed to learning. If I see that you're fucking around with my time, most of the time I will disappear and I will slowly ignore you, and eventually you'll get the message. But if I keep repeating the same things over and over to you and you're not picking up and you're being stubborn, that's different, right? Then we need more help. So just FYI, yeah, I definitely needs practice. It's not something you're gonna pick up overnight and be like, yeah, man, I understand. I understand what this means, the footprint charts, the absorptions, right? You have to be, watching a little bit of charts, seeing how we play out and go, apply it yourself at smaller size. Worry about the process and the system, not so much your P&L when you're trading. Okay. So we covered this unfinished auctions, and in the tools that you guys use, you can definitely, I can highlight these real quick. I can highlight unfinished auctions with these little green things, right? So now if I go here and it's gonna highlight it for myself, right? I would just go here and somewhere on the top or bottom it's gonna be an unfinished auction eventually at some point. Maybe I should increase this damn tick size here instead of. And you see now just highlighting, telling me right now, hey, this is a failed auction here, failed auctions, and the purpose of failed auctions that they're going to revisit to resolve the unfinished business. It's almost like you get in a fight with somebody and they hit you and they run away. You will want to finish that business if you're somehow, right? Not saying, physically, but you will want to resolve either legally or you're going to put an end to it, right? And that's the same thing here, right? It's an unfinished business. The selling did not complete formally, right? So they're going to have to revisit that and see how we go. And you see we're failed, complete. Okay. Let's see what else we got. And there's a lot of examples here, right? On this, right? So I do suggest you read everything, take notes, and then if you have questions, we can talk. Is there anyone that doesn't understand imbalances, stacked imbalances? So the way they work is basically we're looking for aggression of buyers and sellers, right? So we'll go here. We're looking to see where they stepped in on the aggressive side or, aggressive selling or buy, bullish buying here. So for the purposes of showing you guys, I'm just gonna go. What I'm doing here is I'm changing how many stacked imbalances in a row do I want to highlight. I changed it to 2, and usually they're gonna, let's see, like there's one that was 3 here, meaning there's 3 imbalances in a row. 1, 2, 3. Usually, I don't know why, but this one would be highlighted as a stacked imbalance. And now if you look here, where are we? Well, we're nowhere close to that because we ran pretty wildly, right, from that level. And usually on imbalanced candles like this one, you would have a stacked imbalance. You see how here, you have one here, one here. These levels become really, really support and resistance. As you come back here, what is this, 14.97, you would expect to see a bounce here. If you look at the zoom into the balance and then you see, a bunch of here, would I trust this balance as much as I would trust this one? What do you guys think?
The lower one has, well,
Yeah,
you lot
the
more
lower,
volume.
the lower one means more because they really tried, right? This one here is a little odd. Sometimes high frequency trading or stops on smaller time frames can trigger this, right? Where they're buying to cover, right? If they were shorting the market and the market pop, this could be them covering, right? They're already short. They're -1 here. They have to buy one, hence the 0, right? That's how that would work. They would buy to cover on the market side. Does that make sense? And the same thing I'm trying to find because we ran 300 points. I have to scroll all the way right here somewhere. Here's a really good example of a sell side imbalance. I believe I remember this one. Let's see, this one was 0, 0. I think it was maybe this one here. Yeah, it was somewhere around here. There was one that was pretty good, right? So I'm only on 30 minutes, sell side imbalance. They come here and then once they lose it. So preferably, can you play 30 minutes on the first step? Yeah, definitely you could do that, right? Like anything else in trading, it's best if you can have some confluence points at that level. It really helps your trade probabilities. In this case, they popped right above it, right? They created value in some kind of node above it. But once they lost it, you should still be aware of it because what was once, a resistance and you broke above it, now a support. Once you lose it, it's going to get aggressive as well. And then, of course, you see, the aggression came once that level was lost. But you can find them, here's a buy side imbalance. They came above, they dipped a little bit below, and you see here, this was a 2 stack. This imbalance, yellow, means it's a stronger imbalance than a green. So you can set up those settings for yourself. 3 green is 3 to 1, 6.0 is 6.1, and then if I change this one, let's change it to, I don't know, this color here, you'll be able to see 9 to 1, right? You'll be able to see the imbalance that's 9 to 1, and you see here, this one's fairly stronger, it has a 6 to 1. And this one's smaller here. And I usually kind of zoom in to those just to make sure, like, is it zeros? Is it this? Like, if you look at this one, not as strong here. And then if you look at the one that we just had, where was it? It was here. Yeah. It was really, not much here, right? It was all zeros. That was before market. So you're looking for stacked imbalances like this one here, probably be a good one to play on a retest, right? If this was to pop down, and I would always check on the higher time frames. If I see one on a daily, I do pay attention to those, right? If you see stacked imbalances there, or if you even see larger orders that are, imbalanced, like there's one sitting right here. If you guys see it, maybe I should change that color. Yeah, there's no way to see that. Okay, well, yeah, there's one sitting there if you guys kind of, but that level is a 15.2, right? And then I'm sure there's some higher seller somewhere else here showing up. I don't see any necessarily imbalances here. Probably somewhere around here. There's one there at 15.5. So I would watch out and use them as support and resistance on the imbalances. And I'll give you guys a few examples on that in the PowerPoint itself. It's basically, it's a level where you're expecting a reaction, a bullish or bearish, depending on the imbalance, if it's bearish or bullish. Okay, so I give you an example here as well to kind of explain it. I use 3 stacked imbalances 90% of the time. If we're in a balanced day, I switch to 2 just because the risk reward. We're not going to have those imbalance moves in that type of day, so I switch to 2. It carries a little bit more probability with 3 than 2. So just FYI. High volume areas, I believe we covered, where I explained to you where you could have gone long, right, on that level. And I'll give you guys the same concept on volume profile here shortly. On NQ here, if you guys go back on 5 minutes when we opened, does anyone remember? I think somebody on the call, I forgot, I heard you. Did anyone remember the 43 level? When I mentioned, it'd most likely be 43, and I think I stepped away. And does anyone recall? Okay, well, I'll have to make it a little bit more, I guess, noticeable next time. Let me see, where is it? Gift Trader, you were actually watching for 44 and 43. Was this the level that we were watching yesterday at 10:20-ish? Okay, so let's take a look at this. So why was this level, I guess, mentioned? Does anyone have an idea? I mean, if you took this here level, right? So I had 43 at that time. It was,
You got that doji candle there too. Yeah.
so my level was here. That was on Quant Tower. I had 43 identified as a big delta, and it was a volume profile POC. But why was I confident that it might be a bigger bounce than, I didn't anticipate it to run, to be honest. I didn't anticipate it to run from here to here. I thought they would probably stall somewhere around here and, look for a pushback right here. I thought they're going to make lower lows, take this out. But, once they started cleaning up value areas and so on, they're really not interested in selling. Then there was a short cover rally that the more they shorted, the higher it went. Okay. Hold on, Drew. I think we muted you because you're good now. There was a static coming out. But this was just basically a volume accumulation setup from the RTH, and that was the level on the shorter time frame that I was watching, right? So if you go here and you zoom in, right, you see us opening here 9:30, and you can even accumulate this. Let's see, we had this right here. And this level, and you're coming back right to this POC. You're getting rejected a little bit of the value area high, but coming back here, that's pretty bullish. When you think about price action, this is your lower high right here, right? So let's change this. Why is this level important? This is where you made lower highs, right? Lower high, and eventually you did what? You went away and you made this be the change of character. It's no longer interested in selling. They're looking to buy now. So if as soon as I saw that, that was my level, that I was interested in potentially buying. I didn't think they were going to drop below it just because a lot of volume was there and a lot of delta. It wouldn't trigger the sell side. So they basically came here, and that was a simple volume accumulation setup. And look, I mean, even if you put a nice little zone above it, this was a go ahead level. And then, of course, it just rocketed. Okay. So that's based on volume concept. And it's the same concept in footprints. High volume node's a high volume node, no matter if it's aggression or, not aggression, it's still the same. So any questions on footprints thus far? The next you get into, and I gave you guys a couple examples that I captured as well, so you guys can go read them and see if it makes sense, spend some time on it, is to talk about, the volume. And is there anyone on right now that has not traded volume profiles before? Everybody uses volume profile? Okay, well, that's great. Okay. So volume profile then, I don't know, do we need to cover a lot of volume profile? You guys want me to go into the charts, at least tell you what I look for? And I'd rather spend time on charts, but if you guys, somebody needs it, that's why I'm asking.
I could use a little refresher, Shorty, if it's okay.
Yeah. So volume is basically telling you at what price, how much was the volume, right? It's opposite of what your vertical bars show. So it's at this point, how much volume was traded, right? So you have a couple of components to volume profile. Let me go into display mode here. So each session, right? I look at volume on daily sessions, meaning for one day. How was the volume distributed for that day? Like Friday, I will look at the Friday session solely on that one, be like, okay, was it a P shape? I would hope it is. And they had a P shape profile, and what does it mean, right? So in this PowerPoint, for volume profile, I teach you actually how each profile shape and what it means and how to trade it. Right. So I strongly suggest you guys look at that, right? And P shapes and an uptrend, you can play the retests of the HVNs, right? If a P shape shows up in a downtrend, it has a different meaning when showing up in an uptrend at the top, right? If a B shape shows up in an uptrend, it's different than when showing up on the bottom of the trend, right? Those are the things that you have to recognize when you're looking at these daily sessions, right? And the same thing is applicable to weekly, monthly, but the only thing that changes when you shift those is the time frame you're trading on. I can't look at yearly volume profiles and be a day trader. It would be very, very stupid because I would probably never take a trade. So do I look at, you guys see me looking at weekly and monthly and dailies. I don't expect every monthly to hit when I'm day trading, but I'm aware if the price is near that level, I want to be aware of it because I don't want other time frame buyers or sellers, depending on where we are, step in while I'm playing the opposite trade, right? If you guys remember, we had the June value area low on ES at 43.50, and I would say 99% of us were confident we are going to catch a bounce from that level. It was a 3-month balance, right, low, and they came and they literally bottom ticked to that level, and then they exploded much higher, right? They went to like 45 something. So it's important that you are aware of those levels, and each session, or whether it's weekly or daily or monthly, is going to have components of POC, which is your highest volume traded, right? At that level, that's where it's basically a high volume node. They'll always be your high volume node because it's the point of control. That's where equilibrium on the volume is. Then you have the value area high. If it's a daily session you're looking at, let's say Friday, this is the value high extreme, meaning at this point here, that's where the top of the 68% of the volume is traded, and that's where the bottom is, right? In between, that's what I consider if you're in balance or not. This means balance. If you pop out of it, you're out of balance. Balance is 70% of your first standard deviation, right? The 70% of the volume is within. Okay. This is just, if you failed any math classes, this is just your regular bell curve with standard deviations. And, typically when you're in any charting software, they go down to 70%. I changed mine to 68. You're welcome to keep it at 70. The concept is the same. It's just a 2% difference, right? High volume node and low volume nodes, right? When you think about these, high volume nodes are just where a lot of volume occurred. A low volume node means that there was no volume. It was low volume. We call them skinny bellies. And usually low volume nodes occur on imbalance moves. You guys saw earlier when we had imbalance moves just because there's no time, and there was basically a quick pop and they kept driving the price higher, and nobody's in the way to sell at that point. And it could be most of the time The sellers, if it's down move, I'm sorry, if it's a up move, the sellers move their offer higher. So now you have to go a bit up to get to it. And our job as a trader is to figure out where's that offer now, right? Profile type. So I would say we use a lot of fixed range, meaning you pick which points you want to start. I usually in an uptrend, and I'll show you guys. I look for, from the bottom to the top, and I want to know where are these high volume nodes in an uptrend where I can go long on the pullbacks. Same is true if we're in a downtrend, I use fixed range. Visible range, I would say I don't use as much. Session volume, I use that a lot. That's every day I get a volume profile. And then PVP, we use that for our monthly and weeklies. And if you ever go into our yearly profile, we use that on TradingView, right? If you're in a bracketed market, like I would say, we'll check here shortly on the monthlies. We were in bracket for 4 months. Did we close above 43.50 on ES? I don't even know if we closed there or not. If we close above 43.50 on ES, that means we are inside what? June value area low. I'm just testing, see who knows. We will be inside that level. So we are back in a 4-month balance. If you're unable to break it here tomorrow or Monday, then there's a high chance we're going to be targeting the POC or closest high level levels of the monthlies, right? Whether it was September or August, we will look at it here shortly and identify those levels as magnets, right? But we would most likely target September value area high, depending on where we are right now in terms of September monthlies. Okay. If you're in a bracketed market, you can watch this video here, right? If you click on this, once you look at the PowerPoint, you click play, it's going to teach you how to draw your standard deviations and how to basically plot the levels. When you're in a bracketed market, this works really, really good. A lot of you guys use it. I see it, and it really does have you're going to catch a reaction on the 2-3 sigmas. Most times they're not, right? So I suggest you definitely watch this. It takes 5 minutes to watch, and you'll understand it just as if I was speaking about it. Okay, so here's your visual of what it means to be bracketed, right? We are starting a fixed volume profile from this point to the right. And basically on the settings, you're changing the value area from 68 to 95 to 99. And you're able to see, right, where the value is getting tighter or wider, but you're always looking for a reaction between 2 and 3 sig. You're going to have a reaction like here. You had a really nice reaction, a zone. Here they popped above it. Once it's lost, they give you a pretty good retest, and then always targeting the POC as your first target, and then losing POC drives down. Value area tips and tricks. I suggest many of you print this slide out and kind of put it out till you get familiar where you don't need to reference it. Where are we opening in relationship to the previous day? Are we opening above the PD value area or below it? Are we below the range, above the value area high? That matters, right? It matters because you can determine the setups that you're going to take. Are you looking, are you above the range, above the PD value area high? What does that mean? What level you have to hold to continue higher? And around this, as a trader, you could build some rules, right? Let's say we have an IB like we had Friday, and you don't want to be shorting if you're above IBH. Some people have that rule. I mean, for me, it's not a hard-coded rule because if I have a big level right above the current session IBH, I don't care about that 1-day session and data analysis when I know other time frame sellers might be really heavy 15 points higher, right? So I will short it above IBH, and I would never make a hard-coded rule based on a variable level the market generates. All right, those type of rules rarely work for me. Okay. What's in red, I would, as you're learning this, just know at the value area highs and lows, usually you will carry or have some long-term buyers and sellers, right? I don't mean this on session profiles like daily, but if the daily profiles match the levels of the, let's say, weekly or monthly, or let's say 6 months quarterly, the levels become so much more important because you're looking for participation from different time frame sellers or buyers. So it's important that you're aware of that, right? I don't put monthly levels and weeklies on my chart just so it looks good. I put it there so I know, who could be coming in. And if they don't react and they allow level to be broken, then maybe they pushed off their offer or bid. And I'm just looking to figure out where's the next level to go to. Value areas, this is basically, I just covered, I think 3 of them, right? How do we, what do I pay attention to in terms of value areas and then potential setups that you can play from here? There's particularly 4 that I look for. Opening outside PD value area, but inside range, right? Opening outside PD value, prior day value area, but outside the range. And then opening within PD value area with the acceptance and the rejection, right? So basically, it breaks down the first one, right? If you're, let's say Monday comes in and we are opening inside the previous day value area, and we are not breaking the value area high and low, that's market telling you, excuse me, that's market telling you we're accepting the price in this range, and this range would be the PD value area high and low, and they're happy to trade there. Okay, that would be the acceptance. If you're looking at the rejection, right, if the market opens within value area high, right, and low, and then at one point it breaks it, up and down, the left side would be the bearish. If they explore the price is lower, what does that tell you? That means they're not in accordance, they're not accepting that the value is here, they believe it's lower, and they're going to push it. But if you, for instance, if you break this price and then you come back inside, that becomes extremely bullish. In this case, you're rejecting previous day value area high to the upside. If you break PD value area high, and then let's say you come back for a retest of that PD value area high, that becomes a really good setup to go long. Okay. This one is opening outside of V8 but within range. That means of PDH, right? So a visual would look like this. This is your previous day value area high, and this is your PDH, aka range high, range top, whatever you want to call it. If you're opening here somewhere, you're, if you want to be on a bullish side, we have to hold PD value area high. We should not dip below that level if you want to see continuation, and that triggers once you break the PDH and then you play with the trend, you're going up. If this falls inside here, that's bearish, right? As long as, right, you're most likely going to test this PD value area low, and that would be the 80% rule. Can everybody see that? Can you visualize that?
Yes, Shorty.
Okay. And then
I can remember that.
Yeah, well, I mean, every day you just have to look at it and see where we opened, and with the orb script, you get the IBH, IB low. You can disable, customize it however you want it to figure out. Then opening outside of EA on the bear side, it would just mean that you're below the level, and then losing PDL would most likely initiate more selling. Reclaim of PD value area low in this case would be bullish. And as if you guys know, this type of opening is not my favorite to open, but it can lead to some nice profits based on 80% rules. So I hate it, but I love it only when it works. Opening outside of range. So this is important, right? This is where the market gaps and the gaps above your previous day high or low, right? Gaps up or gaps down. It's important if it's on the bullish side, if they gap up above PDH, that they hold on to that PDH. If auction occurs and it's, let's say, a failed auction inside previous day high, then it's a problem most likely for the bulls, and a lot of cases that you're going to go lower and lose that gap. Okay. And that's what that would look like here. If you're here and you lose PDH, really high chance you're going previous day value area high, you lose that, 80% chance PD value area low. On the bear side, if you want to remain bear, you're paying attention to the IBL. If that is reclaimed, your shorting should slow down a bit. If you come here, your first instinct is to short PD value area low here and then to continue down. But if this PD value area low is reclaimed after a gap down, you might want to step out of the way because that's going to explode. Okay, and you can go back and test these and see. And I would say 99% of the time, there's a chance that it's working well. If you're reclaiming PD value area low, high chance you're going to go PD value area high. If you drop below PD value area high here, high chance you're going PD value area low. Do you guys think this happened Friday?
Absolutely.
Anyone else? This definitely happened Friday, right? How many shorts we had piled up on the market? Everybody was short, but you know, the tape was getting weaker on the short side, and then the hedges came off. If you guys look at the options, right? And then basically they busted through. They had to buy to cover, and you know, they were buying to cover, they're short. So sometimes you have to watch this. If you're constantly at a level, right, that's low and we're not breaking them, that means the market's too short. Markets never fall down when everybody's short. Does that make sense? Hopefully you guys can easily understand that. But yeah, their goal is not to dump the market when, you know, Bean is ready to make $100 million on the market. Okay. Initial balance and high. So this is, I would say, fairly important that you guys understand it, right? Within the first hour of a trading day, we're going to have the initial balance that's set. And using volume profile or market profile, whatever you're using, you take the 930 to 1030 high and low, and that'll be the initial balance for the market. If you're able to successfully auction higher on IBH, let's say, you know, 3-5 minute candles above IBH after 1030 and hold, there's a 88% chance that the low of the day is set. Why is this important? Well, if we know the low of the day is set, there's 12% chance you're gonna go lower only, then we're looking for a bounce to go higher, right? Same is true for opposite. If you're below IBL, then we know the high of the day is set, so you can set your sentiment, right, on how you're gonna trade for that day based on this. And I pay attention to it, right, just because it works a lot of times, like 88% of the times. So I do pay attention to this, right? If we're stuck in a range and you had a previous day in D shape, you know, higher chances that IB is going to be similar to the PD value of the prior day, right? Until we squeeze. The wider the IB, right? What does that mean?
Higher chance it
I
stays in
knew
range.
this.
Higher what?
Higher probability that it stays within the range.
Exactly, yeah. And I always reference the base of the lamp. The wider the base on the lamp, the more effort you're gonna need to tilt it and to break. If you have a lamp like my wife buys, I mean, you just have to walk by it. And there's a high chance you're gonna be buying a new one shortly. So same concept in initial balance, right? If the initial balance is 15 points, and you know, let's say average on ES is about 20, and if you're opening and you have 8 points, there's a high range chance that you're gonna break that, and you go with the break. Right? If we're opening and we are having a typical day and we're opening within, let's say, balances at 25 points, the odds are lower that you're going to break. Okay. So that's just visualization of it, right? And then this is the profile date types. I'm not going to go through all of this because I think I put in a lot of time and effort to kind of put everything inside of it, right? And what they mean and how to trade them. So I think it would be good if you guys spend some time on this, and it would tell me as well that you guys are picking it up if you can talk about it, right? Because if I'm the only one talking and you guys are listening, I don't know how much you're getting until you actually put it to practice and to use and take some notes on it. So I would strongly suggest you go on this. I cover every shape profile that you have in the market and how to trade it. Market profile, I actually am getting the tapes back this week. So as you guys know, I have some tapes that we can use, and I'll let you guys have it on the audio. Peter Stadelmeyer's training on market profile. I believe it was 1985ish, 86. So you guys will have access to that. Hopefully I can put it up in nice audio and you guys can listen to it if you care. But basically covers the trading. The market profile was invented by a guy, and you would get to listen how he trained people on the floor. Okay. So 1981, he came up with the visualization, and all it does is price and time, right? So you have price and time, and the volume is the confirmation factor of trading, right? It really is not intended for, swing trading. A lot of people have adapted using market profile on like a monthly profile and making swings. It's doable, but it's not recommended. The only difference, excuse me, the difference between market profile and volume profile is volume profile focuses on volume and market profile focuses on time. So there's something called TPO, right? Time, price, opportunity in market profiles. When you guys look at these market profiles and you guys see me sometimes bring them up when I'm trading live to kind of identify it. When you see this, each letter represents 30 minutes, right? So each set of letters, like letter A's, are 30 minutes right here. So in this example here that we have, the 30 minutes on, I guess, coffee, went from 91.75 to 9100, right, was the first 30 minutes. And then you see letters A and B, in this case, would be considered the initial balance. So initial balance was from 91.90 to 9100. So, right, the extensions, the breaks of this would be the extensions. So we broke the IBL in the D period. That's how people would tell you that, right? And then you see the more time was spent here, the point control was assigned because the most letters were there. Okay. And then basically a cumulative profile is this. This is called separated profile, right? Divided profile. Each letter represents where the price went, higher, lower, and then you're able to bring value area around it. And at the top, I asked you guys earlier, how would you identify single prints on market profile or TPOs? And it's basically with the single letters, right? When you have a sell tail or a buying tail, usually that indicates a completed auction. It also indicates access, right? So if it's on the top, it's access supply. That means they're going to sell aggressively from there. And on the bottom, you see a buying tail right here. It looks like there was some other time frame buyers that stepped in and drove the price aggressively up. Okay. Sometimes you guys will hear me that there's a single print. What does that mean?
Only 30-minute time that it traded at that level.
Yep. That means it did not spend a lot of time there, and usually those are considered poor structures, and they have to be revisited. The market's really good about making stuff fixed and equilibrium, and everybody gets their buy and sell, right? It has to. So that's why we say single prints usually needs fixing, and I'll show you guys that here in a second. I cover it here. If you have two or more TPOs at the top or bottom, that means two periods were visited but was not able to auction lower or higher. That means unfinished auction. They did not agree on the price and usually needs somebody else to come in and help resolve that. Okay. Then I check, just like I check in volume, are you in balance or out of balance? Are you within the value area or not, right? Value area being the 68 or 70%, whatever you're using. Okay. I also pay attention if the value areas are shifting higher, and are they shifting with volume? Meaning, let's say Friday, if we shifted higher in volume and price did not match, that tells me what?
Absorption.
If you're going higher on a lot less volume, that tells me that they are, most likely going to come back and retest here shortly, because there was not a lot of institutions following through and buying on that run up, right? And the value remains lower, so most likely they're going to bring it back to perceived value of the majority. Okay. SR flips, this is easy stuff. You can find this from Jake. Candle formations, you guys can read through this, kind of go through it, understand the buying pressures and selling pressures. And the cooling does a great job explaining that. That's what this is. Pin bar examples, you guys should know that. This is the setups where you guys can go and see on some of the stuff where we talk about acceptance and rejection. This would be a rejection of finding new value area here, right? You popped and you're coming back below. High chance that you're going to execute this 80% rule. Acceptance is pretty much like the first slide that we covered. There's a high chance of acceptance here. You're breaking the value area and you're coming here for a retest. That's, you're trying to seek value higher, right? So I suggest you guys go over this. And then, if you lose a value area and you regain that value area, that's a really bullish scenario. Just remember that. And a lot of times you guys will see that but ignore it because you're scared because the emotion stepped in, and usually that's painful for trading. Okay, volume accumulation setup. So I'll go into this, but I'm gonna go show it live on a chart so you guys can see it. It's important that you know that you have to be in a trend, whether it's bullish or bearish. If it's bullish, higher highs, higher lows, you're looking for high volume nodes to take a long. If it's bearish, you're looking for a high volume node to take a short, whether it's POC or a different volume node, okay? Let's see here. So this is our latest right now on the bigger time frame, right? Which we know about 4140, somewhere around here. We would have POC for a potential bounce. Here's this, and I give you really example with everything, thought process behind it. So I suggest you guys go at it. If there's no question, well, let me cover 80% rule. So 80% rule is if you are, this is your PD value area high of day prior. Let's say you open above and then you spend some time inside the value area, right? There's an 80% chance that you're going to hit the PD value area low. And we actually got a handful last week. So I would take a look at this. It does work great. It wins 80% of the time. So it's not a bad weapon to have in your trading, right? To use that a lot. And then here's the bullish scenario where basically you open below the PD value area low, the area has to be unexplored. And then you reclaim the PD value area low, 80% chance you're going to go to the opposite end and test, see if you can break or responsible sellers show up. Okay. So with that being said, any questions on volume profile? And we've covered this in different classes and we can reference them as well. But there's we have a lot of material, a lot of classes on volume profile before. So if you have questions, you can definitely ask. And then we also cover a whole lot in terms of volume in previous sessions. So what I'll do here, just for you guys, if you go under indicators here, if you're using TradingView, and if you go under, under technicals and you click on profiles, you're going to get to these different ones. We talked about fixed range, session, periodic. So I have these favorite, right? So I can see them much quicker. If we go here and we turn on the session volume profile, which one is here, and then you guys will be able to see the settings. There's my 68%, 100 rows, and then you can play with this, whatever you guys like. This just changes the box. For some reason I like not that number. I like 65-ish or so. Gives me a nice look of the high volume nodes. So if you guys look here, right, I even mentioned a few times, we're really consolidating here, right? Ever since the drop here, we were consolidating. And now you're able to see that, after September 20th, this was your, balance high here somewhere. If I can get this. This was your balance high of 1542, and they're able to crack above that, right, and go higher. And now you see here, right, that there was some volume nodes here. Let's kind of zoom them. There was some volume nodes where we rejected here, right? So if you go here, I can exclude this piece as well. I can exclude, come on. I can exclude this day here, and then you'll be able to truly see what happened prior to this day. Does anyone remember 15.1? That was the level somewhere around like here. So this is the node that we are watching, right, for potential rejection. And now when you look, right, there's not much in the way of this market right now going higher. So if I was to, do this way, right? You see that we are in the skinny belly. We are above the value area high of 1520 here, and they most likely will target about 15,372 plus 5 or minus 5 based on this, what I'm seeing here. So somewhere around here would be the target that they're going for. So this is a virgin POC. Does anyone not know what's a virgin POC? Okay. I'm assuming all of you guys know, but just for those shy people, I'll mention it. This is a session POC that hasn't been tested yet. We left from this price and we haven't tested that price, so that makes it a virgin or naked POC. They occur on weekly profiles and daily and monthlies, right? In this case, I'm just now on daily sessions, right? Because I'm using 30 minutes for the daily sessions. So now this is a daily VPOC, right? And here, you guys can, if I was to analyze this, can anyone tell where was your tell sign that there's a potential trend coming to an end? What shape
On the
profile?
4th?
What shape profile do you need to know that there's a trend coming to an end?
Either a
Lowercase b or lowercase p.
In a downtrend, which one indicates a stop to a trend?
a P.
A P. All right, well, let's take a look. On an upside, it would be what shape indicating a trend end?
Lowercase b.
Lowercase b, yeah. So good job. So there's a couple of them. I would say as you come here, you had a P, your B, and now you're shifting a little bit here to a regular shape. And then here, you have a B profile shape. And then you look here, right? It started consolidating here and it's telling you trend is a little bit of an end here. And then basically they sold off here. And then you come to this consolidation here. And I would say they had a weird profile in a B shape here, right? With a couple of distributions, and then they're able to run it, right? And then once they crack that POC and that value area low, they really accelerated. Now you think about selling here and look, what is this shape here? So this would be your P shape here if you guys think about it. So let me remove this. So if you look here, this is your P shape, right? They came back, they didn't spend a lot of time, hence the skinny bellies and low volume nodes on the bottom. And then if you're able to take this out, right, there's a high chance you're gonna continue selling off. Otherwise, I say if you're able to reclaim this value area low, especially break the high of this day here, most likely you're gonna continue running, right? And here they kind of bracketed the market since September 20th, so you could use that to your advantage, but I'm just focused on the daily analysis now. And then you see a lot of POCs, they started, the value area started shifting, low, higher, and then you have this Fridays encapsulating value area, right? That means a lot of participants were involved here, right? And it has a lot of what? Fixing to do. There's a lot of poor structures, right? It has a poor structure here, a lot of 3 distributions that happen on the top, 1, 2, 3, and then a virgin POC sitting at 14,884. Okay. So now when you think about this, right, I would most likely just draw this, right, and look at this in terms of like, hey, where you been? Let me see what's going on. So the 3 sigma is 1550, and that's actually a pretty good level for a long retest. If we were to come back here, that's not a bad level, right? And then you have the 15.1, which is somewhere around here. It might not be a bad level. I would prefer if we get 1550 for a retest in this case, off of daily profiles and this consolidation, because that would mean that you're really interested in auctioning higher and hitting this level here, because this was the last balance you had before the sell-off. So now This is all the daily profiles. And then if I want to use my analysis on using fixed volume profile, you could do that. You go to technicals, profiles, and you could do fixed. I have it here favorite, so I can do this high from here to the low, right? And I'm looking to see where is that POC. And voila, look where it's at. So what do you guys think I would do at this level right here?
Go
Short.
short.
I would not be looking for long here. I'd be looking to enter a short level, right? And then in confluence with footprint charts and then confluence with volume profiles, as we approach this level, I'm looking for a short entry. Can I take a short entry blindly on this level? Yeah, you definitely could, but you have to, again, remember how I talked about those risks and points? I can't expect this level to come here and I give them 2 points on the risk side. Right, if I'm gonna do that, because I'm using a lot of data, right? I'm using almost almost month worth of data here. I can't play, my risk can't be, you know, like 10 points here. You would have to give a little bit more points, right? So if you're playing this 93 and you're getting a 74, that's 20 points, right? So you're only expecting 60 points, so 15, 3, 10 would be your target. So, I mean, you're not expecting a lot. If you want to catch a bigger move, that maybe you give, you know, I don't know how much you guys can afford or not, but, or swing on futures, you know, would take a lot, but you could definitely enter some options, right? Long dated puts from this level. And I would probably put my stop loss somewhere around here, right? On this. If you're able to break this level here, if I'm entering puts, most likely I would turn bearish at this level, right? And add some option dated, long dated puts here. On futures, it's a little bit different to play, right? With swinging futures versus options. I can hedge on my options, right? I don't know. It's not as easy to hedge overnight on swing futures. I rarely ever swing futures. Okay. So that's how I would use the fixed volume profile. My analysis on a daily, I'm looking to see if you're in balance. We're definitely in balance here at, 1333 is PD value area high. So we would most likely mark this level here. We would mark the low level here. Excuse me. We would have this as our previous day value area, right? If we are able to lose this node, well, then you can, kind of see for yourself, where's the path of least resistance if you lose this 50. Most likely you're gonna fix these single prints here. You're gonna fix that right here, and then most likely you're gonna eventually auction to this level of 14,881. And would I potentially go long here? Yeah, I'll definitely take a stab going long there because that's where they accumulated a lot of volume and that's where the imbalance happened. So I would pop in long and see how we do. Okay. I would identify now, I see that we're out of balance, and I would most likely say that we're making higher highs and higher lows on the daily. So we put in a lower low here, and then we put in a higher high. And here's some secret supply here, just FYI. So we got to crack that level, and then most likely we're headed 378. Okay. So now I would go on to the weekly, right? And I would take a look what's going on here, right? So I would enable my weekly profile. And the way you do that is you go to indicators, profiles, and you click PVP. And then you have to change this little guy bar, change it to week here, right? And then you would get a weekly profile. And that's what I'm showing here. So it looks like inputs 1 week, 68, 100. And then it's up to you if you want to style it however you want. And here's what's going on here. So you have 1, 2 weeks, you're in balance. You see the value area high shifting, right? The POC is also shifting here. The value area high and the POC here match pretty nicely, right? If you take a look at this. So that level right here, the 72 to this value area high becomes, I would say, fairly important. So somewhere around here becomes a pretty good buy zone if you're able to come. First, you're gonna have to come and defend this 14,955. If we dip that low, this would be a good level, right? This is your previous week value area high. And what you notice here, the daily session shifted the value area high higher and the weekly stayed lower, which is okay, right? That's normal behavior. So now we know if you crack inside 1530, most likely you're going to tap this, right? There's high odds. If you lose this, then we're going, you could probably take a long here, right? So this would be my previous week value area high. I'm not going to mark them all right now. And here's my previous week value area low. And these become crucial points, right? Just for me to understand. And then if you care, this is your range top, right? This is your range top here. And now I would have some idea how to play this in my head, right? So if you're able to successfully auction here, I'd go long, and it most likely be a trend day. And I would think we're gonna reject right where this high volume node starts at 15,242 approximately, based on volume print here that we have. So now we are out of balance on the weekly, right? And we're out of balance on the daily. The next step that I would check is just to know where are we on the monthly levels, just so I don't get surprised by some buyers or sellers. So here's our monthly profile. I'm just going to delete this here. So here's your starting October profile. We are out of the balance on monthly, right? And this is your September value area low, which was 4961. Now you got back inside of it. What's the natural path to go? Well, this is your value area high, so there's odds that they will reach the opposite side of that value area. You have August, couple of nodes here, right? You're stuck at this node right here. You break that, most likely you hit 15.2. You break above that, then you're targeting this POC here, which is 15, what is it, 241. So I will have this level here identified as September POC, right? Now put that there. And now I can see where's my space, right? If you're able to crack that, give me a somewhat decent reset or retest. I can take this 242 because that's where the liquidity, is low, and we're gonna jump to it. I would be cautious taking any longs between 214 and 240 because that might get a little ugly here, right? And then I would look for this volume node to be fairly heavy here at 373. It was accumulation here. Big node here from before, right? And again, big node here again, September POC in here. So it gets really nasty in this area here, 373. And if they're able to crack that, that means that there's a lot of bullish people and aggressive target of 55 and 721 on the big levels. And now that we're back, I would say inside the June value area low, which was here, you could, on a bigger picture, right, could do this and get the idea where we are. So if I hide, let's just remove all so you guys can follow along. Look where we are right now. So let's hide this. Not that. So we are at the POC of 4 months, and you guys see if you're losing that 93, higher chances are you're gonna go here. We've had a recent run up here, and you see that haven't really been to this volume node, value area low, but we are here, right? So most likely, the buyers are stepping in. Obviously, here you see their support, and that's the node that they built. So now the path of least resistance would be up if we are able to go here, right? And then we're looking for higher. It'd be here, the first level would be right here. Then here would be the second. And then you have the third one, which would be your final one here. And you would be very cautious at this point on a longer time frame. You'd be very, very cautious trading any longs here, because this is a 4-month bracket right now. That makes sense? I said a lot. Okay. What questions do you guys have on volume profile and any of
That
these?
was really, really great, Shorty. So great. Thank you.
Yeah, I appreciate that too.
Awesome. All right. if you're new, do you understand footprints more than 3 hours ago that we started? That's because that's a measure for me if you're learning first time or not. Texas, does it make sense more so than when I asked you, what do you understand?
Yeah, that definitely helped a lot.
Okay. All right. Well, I'm gonna stop here just because I have commitments with the family here shortly. But I will schedule a Sunday watch list that we can prepare, and you guys can see. I will comment on how I'm preparing for the upcoming week, and you guys can follow along and then see the levels that we're targeting and playing bullish, bearish pivots, and the levels we want to take profits off or go long.
Thank you, Shorty. Thank you so much.
All right, guys.
Thank you. Are you going to post this video?
Yeah.
Thank you, Shorty.